reporting today. Yes, it is Microsoft. It is also AMD. It is also Starbucks. You get both sides at a time when we're talking about a story very consistent through all consumer-facing companies, which is they are losing pricing power. Consumers are pushing back, and it is clear there is a weakening appetite to just hoover up everything in the post-pandemic era. That is over.
We started this week by saying, is it execution within an industry, or is it just sort of across the board consumer pushback? These companies, it's really starting to pile up now. I think there are some companies out there that are saying we're doing okay. We saw that from Coca-Cola, but I can tell you far more companies that are consumer-facing that are struggling versus those that are doing good.
Especially because the ones that are executing well still are only able to raise prices by 1% quarter over quarter. I'm talking about Procter & Gamble. They have Tide. They have a whole host of Pampers and Love and all sorts of other staples that people buy. They are not able to continue some of the monumental price increases that they have seen in recent years. We're going to have a debate about whether this is normalizing or not. The debate is among small caps. It is along mid caps that are beyond the tech sector. It's in with the tech, given the fact that they're not able to monetize all of the investments. So I think tomorrow, we're going to have a fascinating discussion about Microsoft earnings, but we're also going to be talking about some of the consumers and how they really play out there,
I'm just going to ask the same question I've asked for like the last 6 months, which is it a welcome cooling or an unwelcome deterioration? And still at this point, through the halfway point of 2024, there's still a massive divide over all of that. It's why you hear things like weakening but not weak. It's why you hear from Bank of America who say cooling but not cool. But there are other people that take the other side of all of that.
Or that say that we're on the precipice of something that's more nefarious. And that's what you hear from Bill Dudley. That's what you hear from Alan Blinder. That's what you're hearing from Mohamed El-Arian, saying maybe this is a welcome cooling, but let's keep it that way and try to get ahead of any less welcome cooling that could come down the pike.
And Neil Data too, of Renmac.
Neil,
Don't forget Neil. Don't forget Neil. Equities right now in the S&P 500 look a little something like this. Futures positive by 0.2%. In the bond market, just about unchanged on 10s. 417.24. The Eurozone data really mixed. It's sort of Germany and everybody else. The aggregate number is okay this morning. GDP doing all right in Europe, but you break it down. France, Italy, Spain, good. Germany, not so good.
Which is the reason why people are baking in rate cuts, but this is a structural problem. And this really is something that people have been trying to get their head around. What did you say? It was like the Seine?
No, ING said that.
Oh.
ING said
that. Wasn't
that.
But it's basically like the Seine, where it's, what was the analogy here?
Sometimes you can swim in it, but most of the time you've got to worry about it. It was basically, you know, I'm paraphrasing.
That's basically European
Eurozone
growth.
GDP. Yeah.
Okay, which is really the reason why I have been sort of questioning some of the rally that we've seen in certain stocks, and that's been sort of, the sheen's been taken off. I don't know. I don't know. Germany.
Going after the Europeans today, aren't we? Need to back off from that. Coming up this hour, it's largely been driven by me, I know. Sinead Coulton-Grant of BNY Wealth as investors prepare for more Mag 7 earnings. Republican Senator Bill Hagerty on potential Trump 2.0 policy initiatives. And Tiffany Wilding of PIMCO on why the Fed should begin cutting at a quarterly pace beginning in September. We begin with the big issue. The big tech sell-off taking a bit of a breather, with investors anticipating earnings from 4 mega caps worth nearly $10 trillion US dollars. Sinead Coulton-Grant of BNY Wealth is still overweight large caps, remaining bullish on tech due to tailwinds from AI and free cash flow, saying the market's recent rotation is just a healthy broadening of the rally. Sinead joins us for more. Sinead, good morning to you.
Good morning, Jonathan.
Good to see you. So sticking with big cap tech, do you believe in this broadening gout? Can we start there? Do you see reasons for that to continue?
Yes, a couple of them. So first of all, we want to see a rally that includes many more sectors. So when we do like tech, we are overweight large cap. We also like industrials, we like healthcare, and we talk a lot about small cap in the last couple of weeks, but let's not forget where small cap has come from, right? This is a very little unwind of some of the losses that we've seen over the last year. And let's think about why that is and when it started, because it started when we had that softer CPI print. A lot of enthusiasm around rates coming down, potentially the rate cut cycle starting. And the reason for that is because you've got that debt maturity wall that starts in small cap as early as next year, 2026. Now, let's be real. If they can refinance their debt 25 basis points lower, that really doesn't matter. But the point is, it's the expectation that we're going to see further rate cuts heading into 2025. And so that gives them much more of a breather.
That soft inflation print was coupled with a decent jobless claims read as well. I think the fact that the labour market hasn't continued to break down in a material way maybe supports that thesis even more, that the Fed would be cutting interest rates, but doing it for the right reasons because the economy was still doing all right. Do you have that faith as well? Just around the labour market, and we're looking ahead to payrolls Friday, do you have some confidence that we can stabilise unemployment in the low fours, that we can sort of get back to target on inflation without that pain emerging in the labour market?
It's going to be very interesting to see what the data print is on Friday. So the last read being just above 4%. Let's level set. 4% is still a very low inflation number, even though it has moved up from 3.4. And so we think you're also seeing the benefit of more people coming into the labor market. You look at the participation rate, that's going up. And so all else equal, you can see the unemployment rate move up a little, but not see a broader negative effect on the economy and the consumer.
I guess that to put both of these ideas together, you're seeing margin pressure from companies that aren't able to pass along price increases, and they're talking about cost cuts. You think that's not going to cause some sort of deeper weakening that's necessarily negative. You just think that it'll be enough to trim. Is that correct?
There are two things that we need to bear in mind here. First of all, let's remember where we've come from. So while companies may not be able to put in place a 1% increase in price this quarter, for the most part, they've done 20% increases over the last 4 years. And I think consumers are just saying enough, right? They want a bit more value. So that is actually healthy. Secondly, the other reason why we're not overly concerned about the consumer is when you look at aggregate consumer wealth. Since the end of 2019, it has increased by over $40 trillion. At the same time, debt service costs for the consumer have remained below 10%. So the consumer in aggregate, yes, it's courtesy of a lot of fixed rate mortgages at 2.5%, 3%, but it means that the consumer has a lower debt service cost than the US government right now. So that's not to say that there isn't differentiation among income cohorts. Clearly, a lot more pain is being felt in lower income cohorts, but in aggregate, the consumer is going to hold up pretty well, we think.
So when you talk to investors, do they feel pretty good right now? When you get a sense of what your clients are sort of investing in, are they getting more aggressive, or are they trying to figure out how to be defensive? Is sort of the tenor of the conversation usually, how do I take advantage of pullbacks? Or is it, I'm feeling a little bit nervous, it's clear things are slowing down?
I would say there are two areas that we're really having a lot of conversations right now. First of all, consumers are feeling pretty good about the returns that they've seen in portfolios over the last few years. However, having said that, some investors still have money sitting in cash. And the conversation that we're having with them right now is rates are going to start moving lower pretty soon, even though a money market fund yielding 5+% has been very attractive. That's going to move lower. And if you do want to be more defensively positioned, then it's a great time to start thinking about getting into bonds. Because here's what we know. Bond markets don't wait until the Fed rate cut to react. The yields start moving lower in advance. And if you move into bonds a month ahead of the first rate cut, 12 months out, you've generated a return that is 2% higher typically than if you wait to move until the rate cut.
Which bonds? Because Matt Hornbach was just on of Morgan Stanley saying that it's hard for him to recommend going into longer term bonds right now, given a lot of the policy uncertainty post-November. Which denomination are you sort of highlighting?
So most of our clients are taxable, and in the muni space, we tend to like the 10-year plus area. We do think some of the 5 to 10-year area looks interesting too, but generally slightly longer dated. And then with treasuries, we actually think that the 5 to 10-year area is looking more interesting.
Matt Hornbach, what he said about 15 minutes ago on the 10-year treasury, you can start to feel this concern about the political outcomes, November and beyond, and what they're going to do with policy and what happens with the fiscal deficit. Do you share those concerns at the longer end of the curve? How politically dependent are some of the calls for you on the bond market going further out and going deeper into 2025?
So a couple of points on that. First of all, we think that the term premium has been built into the bond market now. The key question is around inflation. So depending on which party is in power, we have Republicans and under Trump focused on raising tariffs. If you raise tariffs across the board, that's inflationary. Democrats have also talked about tariffs more selectively, but the big concern is that every time we have seen a very significant run-up in inflation, like we did getting to above 9% a couple of years ago, it's been followed by a second leg, almost invariably. And what is the trigger? So if you have tariffs across the board, that could certainly trigger it. Now, having said that, what is absolutely key is that investors do not invest with their politics, right? So we will spend a lot of time over the next several months talking about the different policy platforms.
Yep.
What the parties are actually able to implement will depend a lot on the makeup of Congress. But what we also know is that when you go back through history, equity markets can and have done very well under different administration types. So it's not a good reason to hold off being invested.
Sinead, it's good to see you. Thanks for dropping by. Thank you very much. Sinead Colden-Grant there of BNY Mellon with an update on stories elsewhere with your Bloomberg brief. Let's get across to Danny Berger. Hey, Danny.
Hey, John. PayPal shares are gaining in the pre-market trade by nearly 9%. It lifted its 2024 profit forecast, predicting earnings per share growth in the low to mid-teens, up from its prior view of single digits. The company says it remains focused on streamlining operations, part of CEO Alex Chris's goal to transform the firm. Famed short seller Andrew Left pleaded not guilty to U.S. charges that he committed fraud. It sets the stage for a high-profile legal battle over his strategies. Prosecutors, for their part, allege that Left manipulated the market to benefit his trading and made false statements to investigators. If convicted, he could face decades behind bars. The trial is set for late September. Shares of CrowdStrike down 3.7% in the pre-market. CNBC reporting that Delta has hired prominent attorney David Bose to seek potential damages from the cybersecurity firm after a Bosch software update that caused global IT outages. Delta fared the worst among the U.S. airlines during those outages, with days of delays and cancellations. And that's your brief, John.
Danny, thank you. Up next on the program, your morning calls plus Republican Senator Bill Hagerty as Donald Trump looks to firm up second-term policy initiatives. That conversation up next.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Getting you set up for the cash open, the open and bell about 1 hour and 15 minutes away. Equity futures on the S&P positive by 0.2%. Let's get you some morning calls and kick things off with Loop Capital, lowering its price target on Disney to 130 from 139, keeping a buy rating on the shares. The analyst saying the street is underestimating Disney's film profits for the second half of the year. That stock is down by 0.25%. Susquehanna raising its price target on Royal Caribbean to 180 from 160 and keeping a positive rating on the shares. The analysts saying they continue to be constructive on the cruise line. That stock is up by 0.25%. And your third and final call from JP Morgan, downgrading Novavax to underweight from neutral with a street low price target of $8. The analyst expecting little meaningful news flow from its proprietary pipeline. That stock is negative by 8.5%. There's some of the morning calls. Let's turn to the election. With fewer than 100 days until voters head to the polls, if re-elected, former President Donald Trump is widely expected to appoint a so-called Capitol Hill cabinet full of congressmen. A potential shortlist includes Republican Senator Bill Hagerty, who is being floated as a pick for Treasury Secretary. The Senator joins us right now. Senator, it's great to catch up with you, sir. We tried to do this last week, so this is our second attempt. I think this one's going to work.
Good to be back with you, Jonathan, Lisa. Thank you.
Let's start with foreign exchange if we can, sir. We caught up with the former president here at Bloomberg just a number of weeks ago. And in Bloomberg Business Week, he told us that he believes we have a bit of a currency problem in the United States of America. Senator, I would love your perspective on that, whether you agree with the former president on that issue, and what kind of policy tools you think the government has to address it.
We have a number of problems with the economy. I think the biggest one, however, and it's related, is inflation. And inflation is driving higher interest rates. Of course, that has a direct impact on our currency. But President Trump's policies will have an immediate impact to bring inflation down, because he's going to end this administration's war on fossil fuels, bring energy costs down, go back to a deregulatory construct, as he did in the prior administration, taking down regulatory and compliance barriers. All of these will have a lowering impact on cost here in America. It'll have a lower impact on inflation. Those will be directly beneficiary and basically help make the case then to bring rates down and therefore bring our currency into a different position.
Senator, there are two other proposals as well, which I'm sure you're familiar with: much higher tariffs, a much tougher stance on immigration. I'm not going to sit here and say whether that's the right or wrong thing to do. I just want to talk about outcomes and consequences. Deutsche Bank, like others on Wall Street, Senator, as you know, have pointed out that tariffs and their associated stronger implications for the dollar are significantly more likely to be the dominant market outcome than policies to pursue a weaker dollar. Senator, my question to you would be, why wouldn't higher tariffs and a tougher stance on immigration ultimately just lead to stagflation?
Look, I'm fully aware of the concerns surrounding tariffs, but let me make this point. The United States of America has the lowest tariff barriers of any major economy in the world. The converse of that statement is that our major trading partners do not have the similar tariffs. They have much higher tariffs. Therefore, we have a real lack of reciprocity. That's not fair. That's something that needs to be addressed. Many of these issues date back all the way to World War II. But there's come a time and a place to step up and address them. President Trump wants to see them addressed. We want to see more reciprocal and fair trading terms. The time has come to get that accomplished.
Senator, from a market perspective, people are struggling with these two goals, sort of national security, fairness on one hand, and on the other hand, the idea of the advantage of a weaker currency for trade purposes, which takes preeminence.
Well, I think it's something that always has to be balanced, Lisa, and I think you'll see any administration do their best to do it. I think President Trump did an excellent job of that during his first administration. The playbook is laid out there. We were strong, we were tough with China. At the same time, we brought economic growth that was twice the rate of any other major economy at the same time here in America. So we can do both. We can walk and chew gum at the same time. I think that's the challenge. The most important thing, though, is that President Trump will come in and end these reckless policies domestically that have created inflation that has caused so many knock-on effects. Again, back to energy independence. We need to get there. Not only will it be important for lowering inflation here, but it'll be an important geostrategic tool as we become much stronger allies who are able to export our energy to places like Europe and Asia.
All right, let's go there. You've mentioned it a couple times, this idea of a war on fossil fuels, as well as the idea of not really achieving the goal of energy independence. We're pumping more oil in the United States. We're producing more oil than ever before, more than 13 million barrels a day. This is something unseen before in terms of production from any other nation. How can you say that it's a war on fossil fuels at a time where it is record production?
Lisa, it clearly is a war on fossil fuels because Joe Biden came in and took federal lands off the map immediately upon taking office. That's a quarter of our capacity right there. What you're not saying is that there was a trajectory that was much more rapid, much higher. We took ourselves off of that growth trajectory and we flattened it. We continued to produce, but demand is outstripping it. Think about the demand for electricity here in America. If you think about what we're going to need for for artificial intelligence, the electrification of the grid. We've got to get back into the energy production business full blast. We have the technology to do it. This administration has done everything they can to slow that down. We need to get back on a rapid growth path. That'll put us on a trajectory to be not only stronger here domestically and lower inflation, but also stronger partners with our allies.
So, Senator, right now we're producing 13.3 million barrels of crude every single day. As Lisa pointed out, that's a record. It's more than anyone on the planet. How much crude do you think America should be and can be producing?
We should be producing more than anybody else in the world, as we are. We need to produce more LNG, and we need to become the strongest energy partner there is. You think about pipeline capacity and the difficulty of getting permits of this administration. You think about the difficulty of getting a refinery started here in America. All of these log jams and difficulties make it less possible for us, make it more difficult for us to be the best possible ally that we could. We need to expand it. We need to realize that this is a true source of competitive advantage for the United States of America. Let's exploit it.
Let's talk about who is an ally and who isn't an ally. There's lots of conversations about what's going to happen with trade policy and China. I think we've sort of exhausted that conversation many times over the last few weeks. Senator, I want to talk about Mexico. I want your view on Mexico. We saw from Elon Musk of Tesla that he's holding back investment decisions in the country because he thinks there might be a change in the next year that makes it difficult to produce automobiles over in Mexico. We've heard similar thoughts from auto manufacturers elsewhere worldwide. What is happening in Mexico, and what kind of changes would you like to see?
Well, in 2026, the USMCA is up for renegotiation. I think one of the greatest concerns is the fact that Chinese EV makers are looking to end-run the end-run tariffs and use the USMCA and Mexico market in particular as a means to get into the U.S. market, and they're using their subsidized product destroy the U.S. market. That's going to have to take a very solid look. I think also with respect to Mexico itself, we've seen some very concerning behavior there. The prior administration there under AMLO actually nationalizing American companies' assets. We've got to address that. I intend to speak with the new administration there very soon about what we can do to make certain we have much better and much stronger relationship there with Mexico on fairer terms.
Senator, the last time we tried to talk, you were at a Bitcoin conference, and this was our cryptocurrency conference, and that was where the former President Trump was speaking and fundraising, and we've been asking this question on the show. Why Bitcoin? Why now? Why crypto assets? What's sort of the motivation to really embrace a network of crypto assets and become the preeminent network on the planet? From a Republican sort of stance, is this something that is concrete, and why?
Lisa, I think this is something that has evolved over time. I first began looking into crypto in the previous administration in 2018. That was my first engagement. I initially started at a point of skepticism, as I think many of my colleagues do. But when I began to understand the underlying technology and realizing the potential for dramatic productivity gains, what I thought to myself is we need to make certain that it happens here in America. The last thing we want is to see what happened with the semiconductor industry, where it got pushed offshore and weakened us from a geopolitical standpoint. We need to see this innovation happening here. I've been in many conversations with President Trump. His thinking is likewise involved, and he's embracing the fact that this has tremendous potential for America. We want it to evolve here. We want to create the ecosystem for it to thrive here. And the last thing we need to do is push it offshore. However, the current administration has done everything they can to attack this industry, to push it offshore, again, to use the SEC, the CFTC, every tool at their disposal to come in and attack this industry and refuse to provide it with any type of regulatory framework. President Trump made the statement at the Bitcoin conference that one of the first things he'll do is change out the administration's leadership. Gary Gensler, he said, will be fired. That brought people to their feet in applause. He's going to end Operation Choke Point that's been taking place in the crypto industry here in America, and he's going to try to create the environment here where the industry can thrive, and we'll see the next wave of innovation happening right here in America.
Senator, we've got to dance around the issue about your future, so this is how I frame it. I've got 20 seconds left on the clock. Your favorite city to live in, Nashville, Tokyo,
Absolutely.
Or Washington, D.C.? Which one?
No, it has to be Nashville, Tennessee. And if you'd been there at the crypto conference, you'd have seen the energy there. It is absolutely wonderful what's happening broadly across my state. That's why so many people are moving there.
Senator, thank you, sir. Senator Bill Haggerty there on the latest with crypto, the economy, trying to work out whether, he'd entertain a move full-time to D.C., maybe in Treasury.
You think he would say anywhere else other than Nashville?
Bramo,
He's a Nashville kind of guy. It's a state.
Figure these things out as the months go by.
It's graceful. Beautifully done.
It's as graceful as I could possibly be. From New York City this morning, good morning. This is Bloomberg.
authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's my favorite line in US politics. There's a war on fossil fuels. Republicans say this, and Democrats say, yes, there is a war on fossil fuels because they want everyone to, they want their supporters to think there is a war.
That's a great point.
On fossil fuels. And what gets lost in the conversation is what you did, which is like, well, hang on a minute. There's 13.3 million barrels a day of crude being produced in this country.
Yeah, well, and there's one side that says it could be more, and another side saying, shh, don't talk about that.
Right, it's this convenience argument that they sort of have. Like, there's a war. Yes, there is one.
Yeah, it's very confusing.
And then both sides are happy.
Yeah, well, it's basically a messaging tool. Who's going to be
bizarre,
happy? Yeah.
which is another reason why you love politics, right? Yeah. Okay.
Let's leave that there.
Equities look like this on the S&P 500. We're looking at 3 days of gains potentially. We're lifting up by about 0.1%, a little bit more than that now on the S&P 500, up by 0.2% on the Nasdaq 100. Lots to talk about in the bond market. Potentially a fourth day of declining yields on a 10-year yield. Your 10-year at the moment, that maturity just about unchanged at 417.63. The 2-year doing absolutely nothing, in at around 440, 439.97. I want to finish on foreign exchange. Just two things to talk about. GDP in Europe came out okay. Germany, not so much. Everything else did the heavy lifting. The everything else being France, Spain, and Italy. The euro's just about unchanged at 108.16. Lisa, dollar yen, the big one overnight. Interest rate hike, yes or no? QT, how much will we get?
Basically, this is the reason why the Bank of Japan might be a more consequential meeting from a market perspective, at least near term, than even the Federal Reserve. If they don't hike rates, man, I'm getting all confused. If they don't hike rates, that could lead to a pretty significant reversal in some of the strength we've seen in the yen over the past couple of weeks. If they do, is it going to be enough? Can they offset any kind of lack of a rate move with balance sheet? All these questions that people say could potentially really kind of shift the yen around.
How did Matt Hornback frame things? He had that Olympics quote. What was the Olympics quote?
Oh, it's fantastic.
Stronger together. What was it?
It's great. So the Olympic motto reads, faster, higher, stronger together. It could have also been used as a motto for central bank policies, inflation, and growth in 2022 and 2023. Slower, lower, weaker, together could easily be the mantra for today.
Can we challenge that last word, together? How divided is the rate cutting cycle going to be between the ECB, the Federal Reserve, and the Bank of England? How synchronized is this actually going to be?
It's a great question. And this has been a debate for a lot of people. They basically say people can move at different times, but it has to be generally kind of in the right direction. I will just point out, we talk about slowing growth and actually a negative growth read when it comes to GDP in Germany. And we did just get information on harmonized CPI rising more than expected in Germany, 2.6% versus 2.5%. So does the balance of risks in Europe look very different than the balance of risks in the United States when, hey, they are not pumping 13.3 million barrels of oil every day, and they are dependent on other sources for fuel. This is some of the, sort of backdrop to why it's very confusing.
This is where the Republican senator had quite a strong point around being a strong ally.
I would agree.
On things like LNG. These are some of the criticisms that we've seen leveled at the current Biden administration. Just how much of a strong ally have they been with the Europeans? Will they be with the Europeans over this kind of energy production and energy supply?
I'm glad you went there. The idea that LNG was limited at certain points as far as exports to Europe at a time where they need liquefied natural gas in order to offset some of the lack of supply they've been getting from Russia, that raises some questions about the alliance, just the strategic position, understanding that the goal was trying to reduce inflation domestically, at least heading into the election. That is something that is worthy of a real discussion that a lot of people are having.
That's the latest in the market, some of the broader conversations in and around it. Under surveillance this morning, we need to talk about this. Mag 7 earnings picking up again after the closing bell. 4 mega caps worth $10 trillion reporting this week. Microsoft, Meta, Apple, and Amazon. Investors waiting to see if billions in AI spending is paying off. And we're all waiting to see how patient investors will be a little bit later this afternoon in the face of it.
Yeah, I mean, this basically comes down to a timing thing. Are we talking about CapEx that is useless, or are we talking about CapEx that isn't being rewarded right away, so why should I hold this given the fact that there are other things that I could potentially make more money in? There was this statistic from the Bank of America that for every additional $9 spent in CapEx, you see only an additional $1 in sales for hyperscalers. In other words, you're not seeing it monetized maybe as quickly as people expected. And patience is not a word I would use with a lot of traders that I think would be looking for earnings to outperform.
We'll see how much patience there is a little bit later this afternoon and into tomorrow morning. I want to mention Samsung just briefly, closing the AI memory chip gap with its main competitor, winning NVIDIA's approval for a version of its high bandwidth memory chips, the advancement coming after months of setbacks for Samsung, which has historically led the way in the memory chip market. That's the latest on that front. Beyond big tech, investors also awaiting the Fed decision. The FOMC's two-day meeting kicking off today. Fed Chair Jay Powell widely expected to give a soft signal for a September rate cut. To discuss, Tiffany Wilding of PIMCO joins us alongside Steve Rasciuto of Mizuho. To the both of you, thanks for being with us. Tiffany, I want to cross over to you first and get your thoughts on what we can expect tomorrow afternoon, what kind of changes you're looking for in the statement, and what you expect the chairman will emphasize in the news conference.
Well, I think he's going to say that they are more confident that inflation is starting to move back towards their goal after progress had stalled in the first half of this year. Of course, the fact that shelter inflation has shown more progress in the last few inflation prints is going to help in that. But I don't think that they're going to, I don't think they're going to be in a huge rush. We think they are going to signal a September cut. But the economy appears to be doing okay here. So, I think, in terms of market pricing, the Fed is very focused on, I think, cutting maybe at a once a quarter pace, taking it slow at least at first, unless the economy appears to be rolling over more heavily. And I mean, it doesn't. So, I think he could actually come across as being a bit more balanced. Although we do think they are going to cut in September relative to what markets are pricing.
We don't get an update to their assumptions, their forecasts this time around. We'll get them in September, I believe. Tiffany, I'm looking at their current forecast for unemployment. They've got that for 2024 at 4%. That's below where we are right now. You mentioned maybe them going in September and cutting once every quarter. What would your assumptions be in the labor market for unemployment, given that's your call for interest rates?
Yeah, I mean, so we think unemployment probably ends around where it is now, 4.2, maybe a little bit higher. The labor markets are normalizing, but we think the important fact here is that you haven't seen a lot of, actual layoffs. If you just look at the level of employment, has not really declined. Those are usually the hallmarks of recession. So, we think we're seeing a labor market here, which is easing, certainly. We've had a lot of supply, more supply coming in the labor market as a result of immigration, and that appears to be the story to us. And I think that still allows them, to kind of, cut and do it at a pace, that isn't hurried like we see in a recession.
Steve Rasciuto, I know that you're sympathetic to the view that they don't have to rush. You've been talking about the potential for no cuts being actually okay for 2024, given the fact that there's plenty of momentum under the hood. Do you still feel that way, that frankly all this talk about even cutting rates tomorrow is premature, and that you think they should really hold off and be more patient than many people think?
I mean, to answer your question real specifically, they're winning. They're winning without having done anything, which is the most interesting aspect of this. The promise of rate cuts has led to financial market conditions which are much more accommodative than the federal funds rate implies. So therefore, there's a question as to whether or not they actually have to adjust the federal funds rate. The reality is they run the risk, if they do adjust the federal funds rate, of people over anticipating what they will do. I think they would be very happy over the long term with a gradual reduction in rates, but you've got a Federal Reserve that is dominated by political economists who are very, very much sympathetic with a much more aggressive monetary policy reduction, and therefore the market reads that and is likely to say, okay, once they cut, It's not going to be every other meeting. It's not going to be once a quarter. It's going to be every meeting. And that's why when you look at the forward structure of rates, for example, SOFR going out over the next year or so is telling you that the market's assuming we're going to get to a 2% Fed funds rate, where I think a lot of economists would be sitting there saying, well, maybe we get to 3 or maybe we get to 3.5. The reality is the market's priced in much more, which is why financial markets are so accommodative, which is why they're winning without doing anything.
Steve, you said political economists and that they're in favor of a much more aggressive rate cutting path. Can you tease that out? Because some people might hear that and say, okay, they want to cut rates, that they support an administration or another. Is what you're saying a little bit different?
Yeah, I mean, you've got people here who are policy wonks. They want to play with the levers of monetary policy. They want the idea, the administration likes to play with the levers of fiscal policy. This is a throwback to the 1950s, 1960s, where we had a group of economists that came in that thought they could use, monetary and fiscal policy to craft an economy more suiting to their liking. And we're trying to do exactly the same thing here again. Now, the results of what happened in the 60s and 70s was we wound up with a stagflation environment, which I'm not anticipating here because we had a world of excess demand there. We have a world of excess supply here. But the reality is you could wind up with a higher rate of inflation than the market is discounting. I think the biggest risk for the market is not at the front end of the curve, it's at the long end of the curve, because yields at the long end of the curve are not taking into consideration the risk that what these policymakers are doing runs the risk of creating an embedded higher inflation rate than is currently priced into the long end of the curve.
Steve, are you suggesting there's more chance that 10s trade in the 5s next year than they trade in the 3s?
I think that's exactly the right scenario to think about. That is the risk-reward trade, yes.
Tiffany, you're at the bond house. What are you and the team doing with regards to that? How are you thinking about the challenges to the long end of the curve in 2025?
Yeah, I mean, we certainly think that over the longer term, markets can price in more, just more term premium, as a result of the outlook for the U.S. federal government deficits and debt. Clearly this is, we're on an unsustainable trajectory. That trajectory is the result of, Social Security, liabilities in the future, and these non-discretionary programs, the U.S., those will have to be course corrected at some point. Obviously, the big loser coming out of the pandemic was the government balance sheet with additional debt. And at some point we agree that the markets will need to price in some more term premium for that. But at the end of the day, and you can get a steeper interest rate curve, but at the end of the day, we think that government policymakers, maybe not this administration or the next, eventually they will do the right thing and we will, get some course correction. And we think the markets are currently giving the U.S., that longer-term fiscal credibility. So, I mean, ultimately, I think it's nuanced discussion. We think the curve can steepen, so where term premium can get priced, but we aren't expecting, some messy volatility to result from this.
Tiffany, what do you make of Steve's argument that these officials on the Fed are political economists who harken back to sort of some of the philosophies of the 1950s and 1960s of fine-tuning everything? So they are going to be more prone to trying to support a market and being a put, essentially, the way that they're being treated in markets right now as sort of, either way, it's going to be okay because they can come to the rescue. Do you kind of find sympathy with that view?
Well, I mean, I think that now that inflation has moderated quite a bit, and now that people are more confident that you are still going to get some additional moderation, it could be slow, probably will be bumpy, might not get core PC inflation all the way back to 2, but could live with it in a 2-point-something zone. The Federal Reserve officials, as they should, are going to start to focus more on, the labor market side of the mandate. And, the view over the last, several years, I would say, and even in the long-term strategy review that was completed several years ago, the view is that if you let the labor market run a little bit hot, it's okay for the economy. It's actually good. You have people coming back to the labor market. You have underserved communities, that really start to benefit from that. And I think that's certainly the kind of policy views that people have. And as a result of that, they will be quick to start to to drop interest rates, I think, if you do see a labor market that's loosening or rolling over more than they expect.
Steve, I want to just finish up with you because there's this question about what the consumer is doing based on some of the corporate guidance that we've been getting. It's been sort of highlighting the pricing, the lack of pricing power at a lot of different companies. And pointing to this question, as John's been asking repeatedly, and rightly so over the past 6 months, is it weakening or weak, cooling or cool? Are you changing your view on whether this is actually truly a less, perhaps, heated economy than you thought, say, a month ago?
No, I think the economy is still going to see an inflation rate at the end of the year that's much higher than the Federal Reserve's target. I think the hope that the currency continues to provide the ability for global goods deflation to dominate on, or to have an impact on the favorable impact on the domestic inflation story is a risk. Foreign central bank policy decisions can have an important impact on the currency. It's not just the U.S., and the currency has been one of the critical components here. If the dollar were to take a turn to the downside, and you were to take, for example, your DXY measure, and you were to head it back towards 100 from the 104, 105 area it's been trading in, you could have a significant impact on goods inflation. And if you had a significant rebound in goods inflation, you would have a significant bounce in inflation. And therefore, it's not just the monetary policy decisions here, it's the monetary policy decisions overseas. And that's why you shouldn't rely on that component to be the component that drives your inflation story, especially when you want to keep a labor market hot. This concept of a hot labor market gets to the question of, well, what is a hot labor market? The natural rate of unemployment had always been seen to be 4.5%. Now suddenly we've lowered the target for where the unemployment rate should be by the end of the year to 4%. That's a very significant downward adjustment in the unemployment rate. So yes, the Federal Reserve lowered the threshold to make it look as if the labor market is accommodative or becoming more available, or the slack is developing in the labor market more quickly than is actually taking place. And this is a critical component. You look at the claims numbers, you look at the continuing claims numbers, you look at the number of job layoffs, people are not getting fired, and it's harder and harder to find skilled workers. Wage pressures aren't coming off the boil. It has been really an environment in here where global goods deflation has been pulling down the headline inflation, just like global goods inflation moved a lot of it up to the upside during the COVID environment. It's now reversed that. But by the same token, the service component is not coming down, and the service component is the dominant component within the U.S. inflation rate, because we are much more of a service economy than we are a goods economy.
Hey, Steve, Tiffany, big week ahead. Thanks for giving us some time this morning. Steve Rasciuto there of Mizuho, Tiffany Wilding of PIMCO, two of the very best in the world of economics. Looking ahead to some jobs data a little bit later. Job openings coming at 10 a.m. Eastern time, so in about an hour and 15 minutes for the month of June. Then a ton of July economic data. We'll get the ADP report tomorrow. The day after that, we'll get jobless claims. Then it's payrolls on Friday. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, Procter & Gamble shares lower pre-market. Quarterly sales miss estimates, rising just 2% versus expectations of 3.4%. P&G struggled to push through price increases in its household items, raising prices by just 1% in the quarter. That is the lowest increase in nearly 3 years. It does rhyme with Kimberly-Clark's earnings, which also missed on sales in its report last week. Warren Buffett's Berkshire Hathaway cut its stake in Bank of America again. The company disclosed its third sale of Bank of America shares this month, pairing its massive bet on the lender by a total of more than $3 billion. Still, Berkshire holds almost 962 million shares. The filings show worth $39.5 billion at Monday's closing price. Buffett is taking profits with the stock up 22% this year. And it's day 4 of events at the Paris 2024 Summer Olympics, with finals in fencing, judo, rugby, sevens, gymnastics, and swimming. In tennis yesterday, Novak Djokovic ended Rafael Nadal's singles run, beating him in their 60th and possibly last head-to-head match. For the U.S., the men's gymnastic team clinched a big win, taking home bronze for its first medal since 2008. The U.S. is leading the overall medals count with 20. 3 of them are gold. Meanwhile, Japan has 6 gold medals, 12 of them overall. And that's your brief, John.
Danny, thank you. It was sad watching Nadal. I don't know how much of you saw it, but it was sad. I hope he gets it done with Carlos Alcaraz.
I got to be completely honest. I actually wasn't watching that. I was watching gymnastics.
Okay.
I was even watching like the ribbons.
I watched some of the gymnastics too. I didn't watch the ribbons. Don't know what that is.
I watched the ribbons, which is really quite amazing. I watched synchronized diving.
Oh, you were busy yesterday afternoon. I was getting ready for the show.
Yeah, well.
Up next, I was doing the same thing, as you can tell, maybe. Up next on the program, we'll run you through the day ahead, the week ahead, and we'll get some thoughts on the baseball with David Rubenstein. Look out for that next from New York. This is Bloomberg.
You're a famous photographer, you're a conservationist, you're an activist. How would you define yourself?
I think I'm just a human trying to figure out how to be a better steward of our little planet. I am a biochemical engineer by training. I studied marine biology, fisheries, aquaculture, and then I realized that the ocean is very much out of sight and it needs help. And so I became a photographer to be able to communicate with a larger audience. And thank goodness I was good at it.
When did you realize that actually photography was your passion and you could make a real difference to our world?
You know, I didn't start out as being a photographer, so it was not until 1990-something, 96, when I picked up a camera, and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words, and then you put a few sentences together, and one day, you might be able to write poetry.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The opening bell about 40 minutes away with equity futures elevated by just 0.1%. We're higher on the S&P 500. The day ahead, the calendar, the trading diary looks like this. At 10 a.m. Eastern Time, we'll get JOLTS and consumer confidence data Wednesday. Tomorrow, we'll get ADP plus decisions from the BOJ and the Federal Reserve, followed by a Chairman Powell news conference at 2:30 Eastern Time. Thursday, another round of jobless claims, plus another central bank decision, this time from the Bank of England. And on Friday, the main event on the data side of things, we'll get the US payrolls report. Earnings picking up later this afternoon with Microsoft after the closing bell ahead of Meta, Apple and Amazon. All of that coming up over the next couple of days. Also coming up later, David Rubenstein sitting down with Dimitri Baliazny, the founder and CIO of Baliazny Asset Management. You can watch that on Bloomberg TV at 9 p.m. Eastern tonight. I'm pleased to say that the host of Bloomberg Wealth, David Rubenstein, joins us now for more. David, not in your typical office, not in the Washington, D.C. bureau. You were at, I believe, Camden Yards. I think we have to address the elephant in the room, David. We've got to talk about the baseball. How much are you loving life right now?
Well, we are in first place in the American League East. We have a really good chance of going further into the playoffs this year than we did last year, and so I'm very happy. Obviously, we're not always happy. We lost last night, but there's a game again tonight, and there'll be a game again tomorrow, and so hope springs eternal.
You're going to be, of course, focusing on the trade deadline as well. And David, before we move on to other things, I am just wondering, has this satiated the sports itch, or are you still in the market looking for other things?
I think this is taking enough of my time now. I think, you know, I probably am not going to go buy anything else right now, but this is a very enjoyable thing to do, and I'm quite happy with the team and the way they're progressing, yes.
David, I honestly don't know where you find the time to do all of the things that you do. You did interview Mr. Balyasny in an interview that was really fascinating. I recommend that everybody watch. You talked about his background coming here from the former Soviet Union, from Ukraine, during the time 1990s when he could, and the difference operating there versus operating here. What did he tell you about the importance of the political structure to what he could do?
Well, he escaped with his family at the age of 7 from Kiev, came to Chicago, couldn't speak English, nor could his parents. Ultimately, he became a financially successful person and runs Dimitri Asset Management, now known as BAM, which is one of the largest multi-strategy hedge funds, and multi-strat hedge funds, as they call it. It's like Millennium or like Citadel. They have different teams of people. He has 170 different teams of people pursuing different investment strategies, and each one is uncorrelated with the overall market. And so it's a very efficient way to, I guess, manage your money. He's got now about $20 billion under management. And as you noted, he's the chief investment officer and the founder. Company's based in Chicago, but large offices in other places in the world. And he's a very impressive person. He's also given a lot of money for Ukraine relief because of the war. He's obviously has connections, family connections, go back for a long time into Ukraine. He's a person who, relatively modest in his demeanor, very smart, clearly, and I had a really interesting conversation with him. Many people I interview I knew before. I really didn't know him, and I was impressed with his ability. I was impressed with his ability to articulate what he does, and also with the success of his firm. It's quite amazing that he's built this from scratch without having a degree from a famous university or without having been a native of the United States.
What was the most surprising thing that he told you during the interview?
Well, he told me that he couldn't speak English at all when he came here, nor could his parents, and he really didn't really have any connections to get anywhere. And where he got and how he got off the ground was that he answered an ad in a newspaper. Just saw an ad in a newspaper looking for help. Amazing. He got an entry-level job at a firm in Chicago. And he basically used that entry-level job to learn the trading business. And then when he wanted to start his own firm, the person who owned the entry-level company that he joined became one of his investors. So it's really a success story. Typically, it's a great American success story, an immigrant story coming from nowhere to build a very, very large, I'd say, financial service firm. Quite impressed with him, very articulate and very modest in his demeanor. He doesn't flash his money, he's very low-key, and quite impressive.
Just a phenomenal story. I'm really looking forward to watching this a little bit later. David, good luck against the Blue Jays later on this afternoon as well. David Rubenstein there of the Carlyle Group. You can watch David's interview with Dimitri Balyasny, Balyasny Asset Management founder and CIO, on Bloomberg TV at 9 p.m. Eastern tonight. What a story.
Yeah, especially considering the fact that he came from nothing. I gotta say, it's also quite a story that David Rubenstein is, at Camden Yards, just like living life. He's just like, yeah.
I was going to say, if you're interested in, I've got a club in the north of Italy that I might want to sell you.
You're trying to market AC Milan? Really?
Tomorrow, Julian Emanuel of Evercore, Dan Ives of Wedbush, Emily Rowland of John Hancock, and former St. Louis Fed President Jim Bullard. Fed Day just around the corner.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So what's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google Public, so I had a little sneak preview.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Yes. All right, we are looking at futures gaining 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Shonali Bassett. And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, data dependence. We're going to get the latest JOLTS and consumer confidence data as the Fed meeting gets underway.
And Microsoft kicks off this week's Mag 7 earnings. The scrutiny is high after Alphabet and Tesla disappointed last week.
And the drama over at Pershing Square. A major investor opts out of Bill Ackman's upcoming fund IPO. We're going to get to all of that, but let's take a look at where markets are trading 30 minutes until the cash open. As Matt mentioned, you have futures higher right now. The S&P 500 up about 0.2%. Even more so if you take a look at the NASDAQ 100 up 0.3% ahead of a very important day, a very important week. Take a look at the bond market. It's pretty quiet right now, the 10-year Treasury yield. I'm going to go ahead and call that unchanged, Matt.
All right, take a look at the labor market cooling. It has spread beyond California. These are Sunbelt in white here. Sunbelt states, which is pretty much the entire lower half of the country, ex-California, starting to rise. They're warn notices. So this is what big companies have to file with the BLS when they're about to fire a large amount of people, lay off a large amount of people, and they're starting to climb. Maybe that SOM rule gets met sooner than we think.
Some green on the screen before the market opens. Of course, SoFi raised its forecast for the second time this year as it benefit from new tech businesses and its lending operation. SoFi shares up more than 3.4% and the greatest volume of shares traded for any company this morning, over the tune of $5 billion. Tune in for our interview in the next hour with SoFi CEO Anthony Noto at 10:30 a.m. Eastern.
All right, we have a lot going on in terms of earnings. Some misses that are actually being punished. I'm thinking about Procter & Gamble, for example, even though yesterday we saw McDonald's with a miss that was somehow rewarded.
Yeah, it really speaks to how you can't paint this market with one brush right now. There's a lot of idiosyncrasies. I hope I said that right. Anyway, there's a lot of nuances right now that you need to look at with each company. And I mean, we're skating into the big boys. Of course, Microsoft coming up after the bell.
Totally the big boys, and it's interesting too. We have some airlines as well, JetBlue. We're going to talk all about it this hour.
All right, well, it is a busy week ahead, full of central bank decisions as well. We have economic data and, of course, big tech earnings. Joining us now to break it all down is Ross Mayfield. He is investment strategist over at Baird. So let's start with the fact that we finally get some tech earnings to talk about. Microsoft after the bell. If you think about that in the context of the past few weeks, this rotation trade that we're seeing, do you think that we're going to see big tech really reestablish itself here?
I think it's possible, at least remind investors that things aren't all that dour. These companies are still, highly leveraged to AI, printing money, investing aggressively. So I think it'll be a reminder of why you own these businesses in the first place. With that said, the burden is a little bit off some of these companies to deliver outstanding results and pull the market up higher, because you're getting support from small caps, from energy and industrials and financials. So there is a little bit less pressure on the earnings, although the market, remains historically concentrated here.
Aren't we priced to perfection in a lot of places? I mean, the miss that we see at P&G, it makes sense to me that it's off. Yesterday, McDonald's closed up, even though it posted the first quarterly sales contraction that it's seen since 2020.
Yeah, I mean, as was mentioned at the top here, it's a market of idiosyncrasies, of wide dispersion amongst individual names. We're mid-cycle, you would expect that. It's no longer a rising tide lifts all boats. You've got a slowing consumer, a cooling labor market, as you mentioned. The Fed is talking about cutting, but rates are still in restrictive territory. So it's going to be a lot more about individual stories, about profit margin protection in this kind of environment, because top line growth is slowing. And so I do think you're going to see a wide dispersion of individual performance. And because estimates didn't come down very much, you will see more punishment on slight misses, or even beats that don't kind of meet market expectations.
Where does the rubber hit the road when it comes to the consumer, Ross? You looked at McDonald's, you had some investors really shaking off the worries there. You have Starbucks after market today, and a clear weakening of the consumer. Where does that play through into the market?
Yeah, it's tricky. We talk about the consumer as this kind of big aggregate thing, right? But there's really a bifurcation that's going on, where lower income individuals are struggling with inflation, are struggling with higher rents, are struggling with wage growth cooling a little bit. Where higher income individuals, who do a majority of the spending, are seeing excess income from, high yield savings, are seeing home equity, or have not, felt the pain of higher home prices because they have their mortgage locked in. And so there's a bit of a bifurcation in where that consumer spending is happening. So you're seeing some of, the quick service restaurants talk about value, pitch value, but then you're seeing things at the higher end, do okay. So it's really not one consumer, I guess, is the point, and it's a bit more split than we talk about it as.
So what happens to the middle, and when you went to the middle, and when you put that together into a portfolio, I mean, how does that inform where actually you invest right now at a sector level?
Yeah, it's a great question. Less than a sector level, we're thinking more about kind of the factor tilts of a portfolio. And one of the main themes that we're talking to folks about is right now, even if the Fed is to cut 6 times in the next year, which is where the market is pricing right now, you've still got rates well above the high water mark from the prior decade. You've still got rates in restrictive territory. Quality, profit margin protection, prudent management. These are the kind of things that I think, even as you're seeing kind of lower quality small caps rally here, these are the kind of things that are going to win over the full cycle, in addition to secular growth themes like AI, because you just have a much higher bar to clear in the form of higher rates, of higher and more volatile rates and inflation. And so we're looking to quality companies, sector neutral, as something that'll win not just this year, but over the course of the cycle here.
Ross, if I look at, a lot of labor data, we were just looking at WARN notices, for example, in the Rust Belt, in the Sun Belt, in California, they continue to climb. It's a little bit worrying that we could hit the SOM rule, a rise in unemployment of 50 basis points in the 3-month average, sooner than the Fed cuts. Is there any chance you think that the Fed cuts sooner? Could we get a cut tomorrow?
I don't think so, but I do think that the Fed can and should be aggressive with their guidance and their language. They can do a lot of the work of a rate cut, just with their words. And so I think if they come out with a strong message that they do see a more balanced risk profile, obviously inflation is not back down to 2%, but they have a dual mandate and the labor market is clearly cooling to a point of concern, as you mentioned. You can look at a bunch of different indicators and see the same story. So I think they should come out pretty aggressively, and hint or even guide to a cut in September, and talk about the two-sided risk, because it really is growing. And to the extent the consumer has carried the economy, that labor market is more important than it's ever been.
Is one cut enough, Ross? If you take a look at market expectations, they're obviously expecting multiple into next year. Does the market need to see that much cooling of interest rates in order to keep the heights that we're at?
I think so. I mean, I think again, the market is priced for 6 cuts by just the July 2025 meeting. That obviously keeps rates in restrictive territory, but it's meaningful in terms of the feed through to something like mortgage rates or to corporate borrowing levels. The market is priced for that. I think the Fed needs to probably deliver on that, or I think the market gives back some gains. We saw coming into 2024, that was the story, right? An aggressively priced rate cut path. The Fed didn't quite deliver on that, and the market stayed afloat because of the AI trade, but really underneath the surface, the market was reflecting some angst over the fewer rate cuts that were being priced in. If that were to happen today, I'd expect more market volatility and weakness. I think the Fed needs to deliver on market expectations for, 5+ rate cuts in the next 12 months.
All right, Ross, great to speak with you. Appreciate you helping us kick off the program. That is Ross Mayfield. He is investment strategist over at Baird. Now, we do want to bring you some breaking news on, of course, Pershing Square. Bill Ackman's planned IPO for a U.S. closed fund expected to bring in $2 billion. That's not the $25 billion that was originally penciled in there.
It's not even the $4 billion that was in his letter.
No.
I mean, it keeps getting smaller and smaller and smaller. It seems like there's no demand for this. Or I should say little demand, right? Because $2 billion is still substantial.
$2 billion of demand, potentially less than a tenth of what he initially aimed for.
And we did get some details on pricing as well. It's expected to price on August 5th after the close. That's according to a term sheet that was seen by Bloomberg News. That could mean, of course, it starts trading the next day on the New York Stock Exchange. We know that Bill Ackman sent a letter to investors on July 24th, of course, just one detail in this very quickly moving story here.
And we've reported here, we'll talk more about it later, Baupost, one initial large anchor investor, dropped out. It's going to rely heavily on retail interest. His millions of Twitter followers here showing up potentially. Remember, SoFi is actually an underwriter on this deal.
That's essentially what his letter said. It was intended initially to go to big investors only, and he was saying to them essentially, get in on this now, because retail investors are going to pile into it after the IPO, and then you'll make a mint. But it seems like a lot of them aren't getting in on it now. Still, you can count on, I guess, his Twitter followers not to be watching financial news and to buy into it anyway.
Well, of course, we're going to talk about all of this later on in the hour. But again, just to read that headline again, that is Bill Ackman's planned IPO of that U.S. closed fund, expected to bring in $2 billion, expected to price on August 5th after the close. Meanwhile, let's get a check on the stocks moving ahead of the opening bell. We're going to do that with Abigail Doolittle.
Lots of earnings movers to take a look at this morning, Katie. Starting off with the shares of PayPal, they're up more than 7%. This after the payment company did put up a very solid, in fact, massive adjusted earnings beat. They also beat sales. They boosted the profit outlook solidly. The company really focusing on efficiency and streamlining. As for Procter & Gamble, it's a different story. They missed on sales. This stock is lower on this sales miss, and this is amid slower price increases. The organic sales rate for Procter & Gamble, the slowest in 6 years, may be a sign of what consumers are willing to tolerate. And then let's take a look at the healthcare space, because Pfizer, well, they boosted their profit outlook. Barclays saying it was more than expected, and there is still more room to come. On the other hand, Eli Lilly, here you can see up 1.3%. This has to do with Novo Nordisk's Alzheimer's drug. It yielded mixed results. What's so interesting, because of course Eli Lilly and Novo Nordisk competing around weight loss drugs, so it seems as though that bad news for Novo Nordisk on an entirely different treatment while helping out Lilly. And then finally, Matt, returning to earnings, Merck down nearly 4%. They beat and boosted similar to Pfizer, but the outlook considered not quite good enough by analysts, given the fact that the stock is up nearly 20% year to date into today.
All right, there's so much going on. Abigail Doolittle, thanks for rounding up some of those stocks. Coming up, Microsoft is the first of the Mag 7 to report this week, with investors looking for justification into billions of dollars spent on artificial intelligence. When will we see a return on that investment? This is Bloomberg.
names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The Fed decides.
Who said summers were quiet? I don't remember the last quiet summer.
We're talking about the data not being as accurate during this time of year, an election that's haywire.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
Is the answer here, Jeff, that everything is just plain solid?
It's pretty solid, Tom.
At some point, we got to call it a soft landing.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
All right, let's get to high interest. Look at what's making headlines around the world. Protests have erupted in Venezuela as thousands take to the streets of Caracas to protest what they say is President Maduro's fraudulent win. Venezuela's opposition leader claims her party can prove that the incumbent lost by an irreversible margin. The U.S. and many Latin American nations are calling for transparency of the vote tally. We'll see if they do any more than that. The euro area economy grew more than expected in the second quarter thanks to resilient expansion in key countries, which allowed the region to shrug off a surprise contraction from Germany. The uneven growth outcomes across the region showcase the challenges faced by the ECB as it weighs whether another interest rate cut is justified in September. And Paris Olympic Games organizers postponed the men's triathlon to Wednesday morning due to insufficient water quality levels in the Seine River. It's too dirty. The delay to one of the game's flagship events came when athletes were already at breakfast, leading to some anger and disappointment, as you can imagine.
Well, meanwhile, yesterday, NVIDIA CEO Jensen Huang interviewed Meta CEO Mark Zuckerberg at a conference in Colorado. He asked Zuck about his vision for the AI ecosystem.
I don't think that there's just going to be like one AI model, right? I mean, this is something that some of the other companies in the industry, they're like, it's like they're building like one central agent, and yeah, we'll have the Meta AI assistant that you can use, but a lot of our vision is that we want to empower all the people who use our products to basically create agents for themselves. So whether that's all the many millions of creators that are on the platform, or hundreds of millions of small businesses.
And of course, one of the companies that has poured money into AI is Microsoft, which reports earnings after the bell with a focus on cloud growth and AI spend. Bloomberg Technology co-host Ed Ludlow is here in person to discuss. And I guess when it comes to Microsoft, a ton of scrutiny on that Gen AI monetization.
Yeah, this earnings season, I think we call it the AI money machine, right? So everyone's putting money into the money machine. $1 of infrastructure spend. Microsoft's kind of a leading example of that, where CapEx guidance is it will climb by about $2 billion in the quarter. How much money is coming out? And last quarter, they gave us a sense of that. So the cloud unit, where the AI activity is centered around, had in excess of 30% top-line growth year on year. And they said 7% of that contribution came from AI. And so you either take that number and say, oh, that's good evidence, or you don't. And after Alphabet last week, investors are kind of reserving the right to be disappointed that there's not something more tangible.
If I look at the SPLC, which is one of my favorite functions on the Bloomberg supply chain for Microsoft, I see that NVIDIA gets almost 20% of its revenue from Microsoft. Can this be true?
I love the Bloomberg terminal, and I love SPLC. I don't know if the math is as concise as that, but this is the NVIDIA story. You guys showed the soundbite of Zuckerberg on stage, right? Right now, NVIDIA's business is the 3 hyperscalers, Microsoft Azure being the number 2 player, AWS from Amazon, and GCP, Google Cloud Platform, a distant third. And then Meta is its next biggest customer. So revenue doubled last year. It will probably double again this year for NVIDIA. And it's the hyperscalers that account for all of that, including a big chunk from Microsoft, who has its own silicon ambitions, along with AWS, as you guys know. What they want to tell us, their earnings, August 28th, is it's so much more than that, guys. There's AI for everyone, and we found out how we're going to sell it. But their fortunes are very closely tied, which is why look at the CapEx number, look at the commentary about the spend going forward, and then in after hours, check your NVIDIA ticker.
It is alluring.
For Microsoft, I mean, yeah.
Yeah, absolutely. It is alluring to try to look at NVIDIA. But I also am wondering, I realize this is the sideshow, but because it did create a global outage, I'm curious about how Microsoft may address the CrowdStrike issue.
Yeah, this is how you should look at it. It was 1% of Windows PCs around the world, 8.5 million units. But CrowdStrike software is quite expensive. It's about $50 per PC, which if you're an organization that does something important, for example, an airline, it's likely it's your most important computers that had CrowdStrike installed. So the association effect is interesting, and Microsoft have commented a lot about the restoration of systems. What's more interesting is that CrowdStrike is probably the number 2 player in endpoint security in a market where Microsoft's number 1. And so they might go from being frenemies to Microsoft saying, yes, I think we might do things a bit differently in this market going forward.
And of course, CrowdStrike shares down about 4% pre-market. Of course, the news overnight was that Delta is seeking compensation. Exactly. Right. Let's look ahead to, though, once we get past Microsoft, I mean, the earnings party continues. We have Amazon, Apple, et cetera. What are you expecting when you talk to your sources, investors, analysts, et cetera?
I think for a lot of investors, it's still the money machine. I know that's kind of a silly example, but that's the math they're trying to do.
You want to get money out of the money machine.
Particularly because look at valuations right now. You know, like you look at a chart of blended forward EPS for those Mag 7 names, and it's just going up at a 45-degree angle, and that cannot go on forever. They want to see top and bottom line growth directly attributable to artificial intelligence and the spend. Amazon's the most interesting for me. Go back to Alphabet. They were talking up AI. Everything is fantastical. We're spending money. We're making money. Search was still the biggest contributor to growth. What's old is new, and what's new is old. And I think Amazon will probably tell us a pretty similar story. AWS growth, but also look at advertising on the e-commerce platform.
I want to ask quickly about Tesla. Much has been made of an analyst's near crash. William Stein from Truist said he almost had an accident at an intersection using the full self-driving capabilities. I don't understand why this is such a big deal, considering the fact that there are already robo-taxis operating in San Francisco. They don't crash all the time, do they?
He got a lot of criticism from the Tesla hardcore fans because he used version 12.3.6. There is a newer version out, but it doesn't matter. His point was Musk said in Q1 and Q2, judge us on our ability to solve autonomy by going out and using FSD yourself. This Truist analyst did. He did it in April. He did it again more recently in the past week. And what he's saying is, I cannot yet see the jump. Based on the performance of the generations of FSD he used, I don't understand how you go from a consumer car that partly or partially drives itself to a robo-taxi fleet operated by Tesla. He's just taking what Musk said on the calls and saying, okay, I will do that test.
But other companies, Waymo and Cruise potentially, are already operating robo-taxis that don't crash all the time.
And this is why technology is important on this network. They don't use camera-only systems. They use a blended sensor suite of LiDAR and radar.
Ed, we got to leave it there. Thank you so very much. That is Bloomberg Technology host Ed Ludlow. And coming up, we're going to take a look at the companies making the most buzz on social media. Social climbers, that's up next. This is Bloomberg.
other authorities.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on the futures here. We're looking at gains of about 0.25% on the S&P, a little more than 1/3% on the NASDAQ. The Russell 2000 small caps gaining almost 0.5%. Katie?
All right, that rotation, maybe it's coming back. But in any case, it's time now for Social Climbers. The companies making waves this morning. And first up, CrowdStrike in the crosshairs. Delta Airlines reportedly hiring an attorney to seek potential damages from the cybersecurity company and Microsoft following the widespread outage earlier this month that is said to cost Delta up to $500 million. Next up, score one for oat milk. Sprouts Farmers Market boosting its full-year projections for sales and profits after a stronger than anticipated second quarter. Now, the organic food retailer says that people are sticking with their diets despite higher food prices. And finally, a $3 billion unwind. Berkshire Hathaway cuts its stake in Bank of America for the third time just this month. Now, this move marks Warren Buffett's biggest pullback from a bet that has been a strong vote of confidence for Bank of America CEO Brian Moynihan. And Sonali, that one definitely caught my eye.
Yeah, it's been interesting because, of course, there have been multiple sales, Katie, but it's interesting because Berkshire still, Matt, holds about $40 billion worth of Bank of America stock. So nothing to cry home about. Still a very large shareholder. Remember, Bank of America has actually risen more than 22% this year, so we can call it some profit taking.
Right.
There you go.
He said Bank of America is an investment that you can keep. So, but he's
You want to hear a fun
continues to
fact about Bank of America? So they roll off all of these bonds that they bought at, a very significantly high yield. They were not a great investment. It weighed on the stock. Now they're reinvesting them as interest rates fall. And so the same thing that got them into trouble the last couple of years is the same thing that's making them a great investment now.
That is a fun fact.
Isn't it?
Yeah.
Some bond math.
Not as fun as oat milk.
That's true.
How can it be called milk?
I don't know.
How did you even get
milk
there?
from oats?
It's
right?
a lot of big questions that needed answering. Let's talk to it about Margie Patel. She's from Allspring. She's going to be joining us next. This is Bloomberg.
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that don't
are year long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
All right, after a pretty lackluster end to the session yesterday, we're looking at futures that are up a little bit more today. 20 seconds until the opening bell. I'm Matt Miller. This is Bloomberg Open Interest. You can see that S&P futures are up 0.25%, NASDAQ futures up 0.4%, Russell futures as well. But remember, the Russell 2000 dropped more than 1% in yesterday's session. There you hear the bell on the New York Stock Exchange and on the NASDAQ. Let's get it over to Katie Greifeld right now to see what's going on in the first seconds of trade. Katie, what do you see?
Just about 6 seconds since the bell rang, you can see again, we're green across the screen right now. The S&P 500 up about 0.3%. Big tech up about 0.2%. The Russell 2000 a slight lead right now, but we're talking very slight. The small caps up about 0.4%. A little bit more action if you look under the hood. Let's take a look at Procter & Gamble. Sales missing analyst estimates as it slows the pace of its price increases. You can see that translates into about a 5% drop for shares right now, Shonali.
Also keeping an eye, Katie, on the pharma industry because there is divergence. Merck is falling as the drug maker's profit and sales outlook underwhelm. Meanwhile, Pfizer is on the rise after boosting its profit forecast. Pfizer only up about 0.8%. Merck now down more than 3.3%.
All right, PayPal is also lifting its profit forecast as the company remains focused on streamlining operations. Let's take a closer look at PayPal stock with Bloomberg's Abigail Doolittle. Abby?
Well, on this, Matt, we do have the shares of PayPal popping by more than 8%, up more than in the pre-market, heading to the best day of the year since November of 2023. So a great quarter. As you mentioned, they boosted the profit outlook, really focusing in on efficiency. But it's not just PayPal as a payment company that's doing well today. Take a look at Affirm Holdings, the pay over time company. These shares up more than 5%, the best day in a couple of weeks. This after B of A raises their rating to a buy on profitability optimism, saying that Affirm can achieve profitability by 2026. Relative to PayPal, one thing that's held steady for them, and it's really helped their fundamentals, less so the stock, because the stock has been a little bit choppy, but this is total payment volumes over the last several quarters, and right now we're looking at a very healthy almost 417 billion, really wiping away the small sequential decline we saw in the first quarter. Overall, nice growth. Now, one reason, Katie, that folks may be using PayPal and Affirm, these alternative payment companies, a bit here. Take a look at the delinquency numbers that we have here going for at the top here, basically 18 to 40, close to 10% credit card delinquencies, and then between 40 to 60, somewhere between 6 to 7%. So as delinquencies are starting to rise again, maybe we have folks spending using their PayPal and their Affirm and, again, other alternative methods.
Yeah, and PayPal shares currently up about 7-8% right now, so a good morning for them. Abigail Doolittle, thank you so much. Let's keep the conversation going with Margie Patel. She is Senior Portfolio Manager over at Allspring Global Investments. And of course, we're at a very important point in markets right now. The NASDAQ 100, your big tech benchmark, pretty close to correction territory, that 10% drop from its all-time highs. With that in mind, how high are the stakes for Microsoft, Amazon, Apple this week?
Well, I think that is going to really set the tone, whether we have a mild correction and we pretty much hit the bottom of it, say a 10% correction, and then we have a rebound over the rest of the year. And so I think everyone is really holding their breath to see how these companies roll out this week. We have about 4 very important companies reporting, so that's what's going to set the tone.
How important is AI here, Margie, and how important is it in all of your investments? We've been asking the question repeatedly, how long investors are willing to wait until they get a return on that?
Well, that's right. We've seen a huge amount of investment by the tech companies in artificial intelligence. When will we see the payoff? But I think it's really a long-term positive trend. So I think that we're not going to see a big cutback in expenditures, but we may see a little change in sentiment. So we still think we have several years for high capital investment and very, very rapid growth. So we still think it's very promising.
But how drastic is that change in sentiment? Do you think that more CapEx spending without the proper ROI to show for it would mean that investors are going to start to pull back for a while?
Well, and I think that's what you've seen. I think a lot of those stocks have corrected on the anticipation that we may see less capital expenditures go to them, because we've had the leading tech companies be the biggest investors in technology capital investment. So it's really been a virtuous cycle. So if you break that cycle and any one of these companies cut back on what they're spending because their outlook for the return on AI is less, then you could see more of a correction. But we think that's probably not too likely. We think it's just a modest correction of a sector that's really gotten pretty much overbought this year.
Well, that's a great point, too, that sort of the spillover effect from a bad earnings miss from a Microsoft, for example, it goes beyond just sentiment when you think about the CapEx spend as well. Let's talk about the part of the market that has done well, those smaller companies, the small cap rally. Do you think that's sustainable?
No, I think it's just a really short-term correction as we watch earnings unfold, as we wait to see what the Fed's next move is. And I think it's just really a correction from very, very low relative levels to a modest increase. But we think that the strength in the market is still going to be the large capital stocks, so we don't see any kind of a permanent adjustment to small caps.
Hey, Margie, I'm wondering your take on the Fed, because we're getting more and more economic disappointments. The labor market is looking weaker and weaker, and it seems like it could be a mistake to wait until September before they cut, and then only 25 basis points. Do you expect that they could come sooner? Do you think that they should cut further?
Well, personally, I think they should cut at the next meeting, which is coming up obviously very soon. And I hope they won't be, as their historic pattern, too little too late, and recognize that there are lots of signs that the labor market has slowed. And many corporate profits really have slowed down, too. So there are enough signs for the deceleration that they really could act preemptively instead of waiting to see the numbers tell them what happened 3 or 6 months ago, which is how they've been operating. So I'd like to see them act now and be proactive.
But as they do wait, most likely, what do you expect to happen to the consumer as you see the continued weakening through September?
Well, that's right. What you're seeing is lots of signs in labor for consumers, and even on some companies, we've seen, some mixed results being reported and lowered outlook. So that says to me there's a deceleration going on in the economy that is going to continue to go on, a deceleration over the rest of the year. So we really, I think, need the Fed to be more active and step in and lower rates. They've been here for over a year. It's time to move.
Right, yeah, we just passed that 1-year anniversary of reaching the terminal rate.
Yes.
And I know it's not a zero-sum game, but when you think about the scope of this week, we have big data, we have big central bank decisions, big earnings as well. What do you think is going to be the most important factor from here driving the next leg of this cycle?
Well, I think 2 things. One, I think that what these large cap companies report this week is important because it gives you a good look about the strongest parts of the economy, what they see, how they're going to be investing. And then secondly, of course, what the Fed does here. Will they act or will they wait and watch and see if the economy continues to weaken before they act? So I think those 2 things.
We obviously we're right around the opening bell, so we focus on equities. We want to talk about single stock stories, Margie, and most of your assets are equities. But for a long time, you managed $10 billion in high yield debt. What can you bring from that experience that helps you construct solid portfolios that are so heavily invested in equities?
Well, I think for one thing, the level of high yield bonds, a double B, say at 6.25%, single B's at 7.5%, defaults under 4%. To me, that's a reflection of the whole economy, and that says the economy is in pretty good shape, albeit decelerating. So the high yield market is not giving any distress signals. There's actually a kind of a supply shortage of high yield securities for investors to buy. So we think it's really telegraphing a pretty strong corporate America.
Margie, thank you so much for joining us today. That is Margie Patel of Allspring Global Investments in the midst of a very busy earnings season. Coming up, JetBlue tops estimates for earnings per share as the airline takes drastic measures to cut costs. More on the outlook next. Stick with us. This is Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on the stock board right now. We're looking at the S&P 500 up about 0.5%, 12 minutes into the session. The NASDAQ as well. The Russell 2000 gaining back most of what it lost yesterday with an 0.8% gain. Katie?
All right, it's time now for Top Calls. Some of the analyst action in focus this morning. And first up, JP Morgan downgrading Novavax to underweight. The analyst says that the stock price, quote, substantially overvalues its collaboration with Sanofi. Next up, Bank of America raising its rating on Affirm Holdings to a buy. The analyst optimistic that the buy now, pay later company will reach profitability more quickly than the market expects. And finally, JP Morgan cutting its recommendation on Frontier Group to underweight. The firm is growing increasingly uncomfortable with Frontier's dependence on sale leasebacks, Matt.
All right, sticking with airlines, JetBlue shares are rising a lot after earnings beat expectations. The carrier also announcing plans to cut $3 billion in capital spending to boost pre-tax income. It's dropping over 50 unprofitable routes. Let's talk about this with Bloomberg Intelligence senior analyst, airline analyst George Ferguson. So George, you know, I was saying during the commercial break, last year I talked to a number of JetBlue executives who were basically betting everything on buying Spirit. They didn't get that deal. U.S. regulators put the kibosh on it, and you say they're pretty lucky that they didn't.
Yeah, I think they are lucky they didn't, right? So Spirit would have added a lot more capacity to JetBlue, and would have added the wrong capacity, right? It was basic economy kind of a capacity, ultra low-cost carrier kind of capacity. They would have had to re-rack all those airplanes, would have cost them a lot of money. They're in a market right now, again, looks very over-capacitized, I guess if that's a word, has too much capacity. And so I think better not to be paying up for something like that right now. They can, you know, manage a much smaller footprint, focus a lot more on premium product, which is the way forward, focus on less expansion. I think that's just better for them right here.
Well, George, that's what I was wondering, the fact that they're going to defer that $3 billion in spending, of course, cutting routes as well. I mean, when does this come back to bite them? It sounds like you're saying that they're a far way off from that.
Yeah, I don't think it comes back to bite them near term at all, right? I think the market is, you know, oversupplied. JetBlue's yields were down 4% during the quarter, one of the higher numbers we've seen so far. The markets they're in, East Coast, basic economy kind of stuff, and Latin America are some of the worst performing markets right now, so that they don't need to be adding seats into that marketplace. I think very interestingly too, is that if you look at where the airplanes are being cut, they're not being cut much in the next couple of years. They're being cut out 3 and 4 years. So JetBlue look like they're making a bet that there's probably more capacity than the market needs, even multiple years into the future, you know, and taking away some of those, that increase, I think, as they just see this market kind of, you know, flattish for a while.
And a lot of this renegotiation happened alongside Airbus, which also reports in the next 24 hours. Also reporting is Boeing. When you think of this oversupply problem, George, how does this impact Boeing in the end, along with its own idiosyncratic issues?
Yeah, I mean, the manufacturers have a lot in backlog, right? So they have plenty of airplanes to build. And there are airlines that need airplanes. There's always replacements that you need to put out there, right? JetBlue is more of adding airplanes for expansion. The airlines, that need replacements, Boeing and Airbus need to get production up and moving so they can improve profitability. But I think this takes some of the pressure off both of those companies. I think they wouldn't mind some deferrals near term while they're sorting out, you know, their supply chain. But if that persists for a long period of time, if it persists, you know, into next year, I think you'd get into a marketplace that would have a lack of airplanes. We frankly don't see it, and again, I think they probably welcome it and gives them some time to sort out some of the problems in their manufacturing process.
You know, the shares, I mean, even with the gain today, George, they're down 65% over the last 5 years. It's a period that I like to look at because the comp function on the Bloomberg defaults to that. Shanali mentioned in the meeting this morning that this is interesting also, JetBlue, because it's an activist stock, right? Carl Icahn took a 10% stake. Is he driving these changes?
Look, I think that he's definitely going to be an influencer. I think we heard this, you know, with the CEO change that they were going to be looking at shoring up their balance sheet, and they were concerned about excess capacity. But I'm sure he's helping to drive some of the changes.
George, we thank you so very much. Good luck to you. Very busy 24 hours over there for George Ferguson of Bloomberg Intelligence, the senior airline analyst over there. Now, coming up later today, an interview with the CEO of Airbus. That's at 3 p.m. Eastern. Keep an eye on it. And coming up next, we're going to talk about Bill Ackman's IPO fund that may raise 10% of what the hedge fund manager originally anticipated as major investors pull out of the deal. That and more on our Wall Street Beat next. This is Bloomberg.
It's Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is Bloomberg Open Interest. Let's take a look at the stock market right now. About 20 minutes into the trading day, you can see we're higher broadly across the averages. The S&P 500 up about 0.3%. Similar story for the NASDAQ 100. All the action, though, once again, in the small caps. The Russell 2000 now up about 0.9%. It was your big loser yesterday, but so far today, Chanel, it looks like your big winner.
And Katie, it's time now for the Wall Street Beat. Bill Ackman's planned IPO for a Pershing Square fund is expected to bring in $2 billion. That is less than 1/10 of what Ackman suggested could be raised earlier. Here with more is Bloomberg's Catherine Burton, who reported overnight that one of the large anchor investors here, Baupost, is backing out of the deal. This is $150 million that was supposed to go into the deal, now out. He went from $25 billion for this fund to $4 billion, now to $2 billion. What are the series of events here?
Well, first of all, Bill sent out a letter to his strategic investors, the people that are invested in his company, telling them all these details about who was in, who was out. And that is very unusual, and he eventually had to make that letter public, and the IPO was postponed. And that may be one of the issues why we're seeing the number drop.
It seemed like in the letter that he was saying to wealthy institutional investors and family offices, hey guys, help me big this up now, pre-IPO, because then after the IPO, all the retail money will come in and drive the price up. Is that really the strategy on these things?
That seemed to be what he was saying in the letter, and I think also a little bit of the issue of why they had to make it public.
Does that sting retail investors? Do they eventually learn of that sort of thing and say, hey, I don't want to play this game like that?
Well, it could well be, because most closed-end funds trade at a discount, and so they're doing everything they can in the beginning to drive up the price, but then it could end up trading below the NAV of the fund.
Yeah, and of course, we know that a version of this fund exists already in Europe, and that has absolutely traded at a pretty significant discount. Let's talk about...
But he can't tweet about the European fund, right? And he can tweet about this.
I'm not clear on that one, but...
That's what
There's a certain amount of information he can and can't say with the prospectus out, that's for sure. But also another aspect of this, how important was Seth Klarman and Baupost to this deal to begin with?
Well, as you said, it was $150 million, so not really significant when you were looking at $25 billion. Not the biggest investor. There's apparently a family office in there that was willing to buy almost 10% of the deal. That would be the biggest investor. But I think maybe reputationally, Baupost is a big investor, well-known, you know, that could have some impact.
Well, that's where I wanted to go, actually, because who else was named in the letter that we know about? You know, you broke the news about Baupost. Obviously, you mentioned that unnamed family office, but who else could potentially be an investor here?
Well, he also mentioned Putnam as being one of the investors, a big mutual fund company. But clearly, and he said that 3 of the investors that also invest in Pershing were willing to give money. I'm not sure who they are, but clearly he needs more people behind it.
Super interesting also, SoFi is actually one of the underwriters on the deal, just showing just how much retail interest they're trying to get into this IPO. What does this mean for Bill Ackman at large? This is part of a grander plan, isn't it, for him to take Pershing Square, his whole hedge fund, public. We haven't seen a lot of those in history. What does it mean for his reputation at this point in time?
Well, I mean, he's made a huge coup for himself by selling already a 10% stake in the company at a valuation that some people think is pretty rich. So he did that. Now it's going to be harder to go public, obviously, if he has less money under management. And so maybe that's going to have to be pushed off until he gets to be a bigger size.
And I mean, there's also an open question out there about what kind of valuation the hedge fund, if it were to go public, would actually fetch. I mean, there are some examples of publicly...
Sculptor, for example.
So,
and that was an example of something that ended up not doing so well as a publicly traded company.
That's very true as well. That, I don't know, you think about Elon Musk, he certainly doesn't seem like he likes being the CEO of a public company. And there's plenty of companies, as we've been discussing, that have just been choosing to stay private for longer. So we'll see ultimately if
That's not the point of this, right?
But we'll see ultimately if this hedge fund goes public.
Stay tuned. Supposed to price Monday night.
All right, Kathy, thanks so much for joining us. Bloomberg's Catherine Burton reports on hedge funds for us and this closed-end fund. Let's get to the trading diary, what you need to be watching this week. We get central bank decisions from the Fed, the Bank of Japan, and the Bank of England. Then more big tech earnings roll in with Microsoft and AMD after the bell today, and other notable earnings this week include Boeing, which we talked about, as well as KKR. Coming up in the next hour, SoFi CEO Anthony Noto will join us at 10:30 a.m. Eastern. We'll talk to him as well about, I guess we can ask him about Bill Ackman's fund.
You sure can, why not?
They're underwriting it, as well as a number of other things, including their pivot to a cash lighter business model. And let's take a look at the markets here. We have a lift this morning, just about 0.2% on the S&P 500 and almost unchanged on the NASDAQ. But the Russell 2000, as Katie says, that rotation looks like it may be coming back to life.
Absolutely, and you made the point, of course, it had a big down day yesterday, but already we've almost taken that back, so a lot of volatility in this market. This is Bloomberg.
It is.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Happy first day of the Fed meeting. I'm Alex Steele alongside John Tucker. He's still here. Paul Sweeney is off today. What is it, your 19th hour on radio today?
Oh, it's just such a pleasure. And, finishing up with you, that's just the icing on the cake.
This is why we love John Tucker. We have a great show for you lined up. First of all, we're going to get instant analysis with Dana Peterson. She's chief economist at the Conference Board on the consumer confidence data that broke just a moment ago. I think it's good, but we're going to get her read on that. Plus, Ira Jersey, Bloomberg Intelligence senior U.S. interest rate strategist, will be joining us. Look ahead to the Fed. Also, we get the Treasury refunding announcement that coming tomorrow morning in terms of where the Fed's going to issue. Treasury is going to issue on the curve. We'll get Ira Jersey's take on that. And plus, what's everyone doing? Clients, hedge funds, institutional investors. Sarah Samuels is head of investment manager research over at NEPC, is going to help break all of that down. So we got a lot coming up within the next hour. We also have Business Flash, and for that, we go to Charlie Pellet. Charlie?
Hi, thank you very much indeed. We have got the Dow, the S&P, NASDAQ, all of a sudden trading mixed. We've got the NASDAQ Composite Index turning negative, giving up earlier gains, down now by 0.2%. We have got the NASDAQ 100 Index also in the red right now. That index down by 0.1%. S&P holding on to a 7-point gain of 0.1%, while the Dow now higher by 190 points, up by about 0.5%. We are brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. Download IBKR Desktop at ibkr.com/desktop. Two-day Fed meeting is underway with a decision tomorrow, and of course, Fed Chair Jay Powell's news conference. We will have complete coverage live on Bloomberg Radio. As for what to expect, Kathy Bostjancic is chief economist at Nationwide Mutual Insurance, and she was interviewed this morning on Bloomberg Television and Radio.
I have sympathy for those who said the Fed should consider cutting rates, tomorrow, right? Getting the announcement. Yeah. But they're not going to. They haven't signaled that. And I do think they want to see more data, particularly to be really convinced.
And speaking of more data, just getting word that July consumer confidence came in at 100.3. Estimates were for 99.7. Of course, we'll have more on that data point coming up right here on Bloomberg Intelligence. All eyes on Microsoft after the close of trading. The first of 4 mega-cap tech names scheduled to be reporting this week. Microsoft today a little changed, up less than 0.1%. Meta Platforms up 0.1%. Apple right now up 0.5%. And then Amazon reporting along with Apple on Thursday, up by 0.2%. 10-year yield right now 4.18%. The 2-year 4.39%. Spot gold up 0.2%, 23.88 the ounce. And West Texas Intermediate crude now down 1.3%, 74.86 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much, Charlie Pellet. So, John Tucker, are we in like a good news is now bad news thing? We get better consumer confidence. Job openings look strong, therefore, thus, we're scared the Fed won't do things?
I'm not so sure at this point. I think it's kind of set in stone, the future path for interest rates, at least for, the next few months or so.
Okay. How's your consumer confidence?
I'm always confident. I have no choice. I'm told I have to be confident.
Excellent.
But does that then dictate what I do in terms
Yeah.
of spending and all that good stuff?
Does it?
I don't know.
I don't know. It depends on when he
We
has to
have to
replace
ask
his
the
table
experts.
saw. When he replaces his table saw, then he feels pretty confident because he has one, and that's what happens. All right, so let's get to the consumer confidence numbers. Coming in for July at 100.3. Although you had June revised slightly lower, we're going to get the read now with Dana Peterson, chief economist at the conference board. I labeled this good, but with a question mark. Can you help me understand if this is a good report, bad report, what this means?
I think it's kind of a mixed report. Yes, the headline ticked up a bit, but if you look over the last 2 years, it's been basically been moving around in the same range. It's been moving sideways. And really that headline is made up of 5 different indicators, including thoughts about business environment, employment, and also income. And certainly when you look at the present situation, consumers are becoming less optimistic about the present situation, and they have been kind of dour on expectations. Even though the expectations index ticked up a bit, it's still below 80, and 80 is kind of a signal of trouble.
So what is the history, what does it tell us what consumers are going to actually do?
Well, I think it's good to look at the guts of the report where we ask them, what are you planning on doing about spending on goods and services? So with respect to goods, for the most part, they are not interested in buying homes or cars. They were a little bit more interested in buying appliances and also electronics, like PCs and laptops. But when it comes to spending on services, they're definitely down trading. And they're saying we're going to spend mainly on services we need, not things we want. And we'll stream instead of going to the movies.
Oh, that's interesting. Okay, so when, except for Deadpool, obviously, when did you get an indication in the survey of when that stops? Like how sensitive that reading in terms of spending on services and down trading might be to a rate cut, for example?
Well, we look at these measures on a 6-month moving average because from month to month, they're pretty volatile. And over the last 6 months, it continues to weaken in terms of buying durables. That makes sense because we know that durables are expensive and also you have to finance them. We did see in the Q2 GDP report a pickup in spending on durables, but I think it was also because prices were lower, so consumers kind of jumped in there. But really, we're not seeing much in terms of a big desire to buy durables. And certainly with services, they're buying cheaper services.
All right, Dana, we appreciate it. Thanks for the instant analysis. Dana Peterson, chief economist at the conference board, joining us. No table saws yet for John Tucker. Let's get back to the individual movers in the market, because there are some. The headline index, whatever, but you got earnings that are coming out that are quite interesting. Bailey Lipschultz of Bloomberg News joins us. CrowdStrike, not an earnings thing, but we've been waiting for this to kind of go down of when Delta was going to ask for some money.
Exactly. And so CNBC reporting Delta is hiring a renowned attorney to seek damages potentially from that fallout regarding that widespread outage from Microsoft and CrowdStrike. The thing that stands out to me is not only did the stock take out its low set earlier as kind of the market was digesting the initial news, now trading at or touching the lowest level since December, the stock has lost almost a third of its value, $25 billion in market cap in the fallout of this. Analysts basically saying this isn't surprising that Delta would go to courts for compensation, but this is going to be an issue potentially for customer loyalty that analysts have flagged, whether or not this opens the door for other competitors to actually have an opportunity to step in, and also just the general uncertainty around potential damages is a headache investors likely don't want.
And we did have earnings.
We did have earnings.
And you're looking at which?
Procter & Gamble.
Now, the price increases, they've sort of been muted at Procter & Gamble, so that's good for me when I go out and buy my Crest or Pampers. But it's not good for the company.
It's not good for investors. Investors want those price hikes. They want to drive profit margin expansion. The stock,
I'm not buying Pampers, by the way. Maybe Bailey might.
I am not. Not
no
for the
press. No press.
Future. Maybe I'll be the one who helps drive P&G back higher. in a few years. But the stock down as much as 7%, biggest intraday decline since the pandemic hit back in March 2020, or at least the world shuttered more in the U.S. Not really, I guess, hitting. That was an entire first quarter issue. But again, the stock down, the most since 2020. This coming, as you mentioned, JT, price hikes are slowing. They did actually seem a bit more cautious on the consumer in 2025. Management saying that they see that really not happening until the second half of next year, which when you look at their kind of fiscal 2025 guidance actually shows an acceleration in organic growth throughout the year. So analysts and investors may be wanting some actual meat there.
And this is what I think a lot of analysts were warning about going into the earnings quarter, not just for PG&E, or Procter & Gamble, I should say, is that you have top line growth and then you have the pricing power. The pricing power starts to go away, and if the top line growth isn't there, where are you going to get your margin expansion? Like where are you getting the juice? And Procter & Gamble is a great example of not getting that.
And the thing you have to keep in mind too with P&G is that they derive the majority of their sales outside of the U.S. So while we do see U.S. consumer sentiment stronger than maybe expected, people still, putting their credit cards down. When there's slowing demand in places like China or the Middle East, that is going to hit a company like P&G as opposed to maybe your Target, who can sell private label goods at a cheaper cost to the actual U.S. consumer.
Such a good point. JetBlue?
JetBlue, this rally has really accelerated right now.
Long Island City-based JetBlue.
Is it really?
Yes.
I didn't know that.
Yeah. I had no idea.
This is why we bring you, for this information.
The knowledge that you can impart on us. The stock right now up 18%, though. Really accelerated. Turning point potentially, surprise second quarter profit. New CEO basically laying out.
But they've been cutting all sorts of routes and just like, cut.
The opposite way to drive profitability, instead of hiking prices, which we saw airlines happily do and we saw the consumer companies do, is to cut costs.
So investors at this point are looking at the short-termism of it and not the extended future of the business.
Yeah, and you look at the comments from the new CEO in the release saying early evidence the changes they're implementing are part of their refocus strategy, are yielding positive benefits. So cut routes, cut kind of staff, cut things that aren't driving revenue, and then at least you're more profitable for now. Could also be, and I haven't actually looked closely enough, could also be a bit of a short squeeze, though. Bloomberg data showing about 13.5% of shares currently sold short, so investors might have been expecting a surprise to the downside, being forced to cover.
At the same time, it does still expect lower revenue and higher non-fuel unit costs than analysts were expecting this quarter and for the full year, so, there is that to look in there as well. Hey, Bailey, thanks a lot. Bailey Lipschultz joining us, Bloomberg News senior equities reporter. All right, the main event over the next 24 hours, though, aside from Microsoft, is the Fed. The Fed meeting just kicked off at 10 a.m. In the meantime, we got those better than expected numbers from JOLTS, the job openings increasing, and the Consumer Conference Board number just a little bit mixed. Let's get the reaction here with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joining us. Ira, before we get to the Fed, what did you make of this JOLTS number?
Yeah, so obviously the JOLTS number still shows that there's job openings, right? And clearly the job market is not as weak maybe as some people expect, at least from the hiring side. There's still this both skills gap and also people load to move, right? So it's much more difficult to have labor mobility with people kind of stuck in their houses because mortgage rates are so low that they have versus having to buy a new property. So I think those things taken together show that the economy is still okay.
Well, where are the job openings? Are they, God bless you, are they crummy jobs or good jobs or what? Does it tell us in this survey?
So it gives you, I haven't looked at the entire breakout. I mean, the data only came out a couple of minutes ago, but it does give sector breakdowns as to where, what sectors are seeing the most job openings. But really it's all over the place. And in particular in the Southeast and the South. So places like Texas still see pretty heavy job openings. And, but even in Silicon Valley, right, even in California, there's still a reasonable amount of job openings. Look, with 8 million job openings plus more than 8 million job openings across the country. You'd expect it to be a little bit everywhere. A lot are in services still, but those have those were the ones that had gone down quite substantially. But now those may have rebounded again. I haven't seen where that extra 100,000 job openings came from. That surprise to the upside, but more than likely you'll see a lot in services, and that's something that's been really helping the economy grow because people have been buying services. Like even when you look at the PC report that we got last Friday that had the personal spending and personal consumption numbers from June, and services, people were still buying services even on a real basis, right? So people continue to want experiences. People are still eating out. Yes, maybe as you heard from the prior guest, maybe they're lower end services. People are spending a little less, but they're buying more of that little less, right? So people are still have disposable income. You still see wages growing at a reasonable pace, even if job growth is slowed pretty substantially. You still have people with disposable income that's increasing, and people are spending most of that. So the savings rate hasn't shot up or anything like that, where people seem to be particularly worried. So the economy is not terrible, and so then the question becomes, Alex, to what you asked about before, is then what does the Fed do tomorrow?
Yeah, and so what does the Fed do tomorrow? Because if it's not terrible, how do they forecast a September cut if they want to do that whilst saying the economy is not terrible?
Well, we actually think that they're not going to do that. So we're a little bit non-consensus here at Bloomberg Intelligence rate strategy, in that we actually think that the Fed will be much more balanced tomorrow. And Jay Powell will probably reiterate that they're very data dependent and that they don't have a preset course. So I think the people who are hoping that the Fed's dovish tomorrow, they might be disappointed. Now, there is a group of investors that we speak with who also think that the Fed shouldn't cut at all this year because the economy is still too strong and there's the possibility that cuts could lead to higher inflation. I do think that they'll probably try to cut this year, but September, I think, is too early. The data is too mixed for the Federal Reserve to say that the economy is slipping enough that it needs some kind of stimulative effect. And certainly the data that we got this morning with expectations for the consumer above where they were and above what the market was expecting, all of those are good signs. And so I think the economy is good, not great, but it's also not slipping as quickly as the people who want early cuts believe that it is.
So the inflation fight is not coming at the expense of jobs at this point, is what the data seems to suggest.
Yeah, I think that's correct, but it's also the reason, John, that we don't see inflation falling as quickly either, because we've gotten to kind of this equilibrium where you have the job market's creating wages are then driving spending, and that spending is then driving price increases. So price increases have slowed, but there's still, when you look at CPI, right around 3%, that's still not near quite at the Fed's target, and at the same time, it's not falling very quickly. And I'm excluding some sectors that tend to be very volatile, right? So you take away insurance and some other things that aren't directly related to spending, but you look at just services inflation. Services inflation continues to grow near 4%. If it wasn't for goods prices basically being flat, we'd wind up having significantly higher inflation, right? So there is a risk to that for 2025, and that's like if we get some populist type of trade deals and things like that, those will affect goods prices pretty significantly. And so there is the risk that inflation rebounds if we don't get a handle on the services inflation that we currently have. And I suspect that we won't, because I think that there's continues to be pent-up demand, and people want to live their lives now after spending 2 years indoors, and that hasn't shifted very significantly. Maybe it will over time, but I just don't see that over the next 6 months to a year.
Ira, always a pleasure. I have no doubt we'll catch back up with you tomorrow as well. Ira Jersey, senior U.S. interest rate strategist for Bloomberg Intelligence.
So they're not going to signal rate cut in September.
He's going to keep his option open. Keep the options open. You have to wonder what's going to happen to the front end of the curve if we wind up seeing some kind of sell-off there and yields kind of pushing higher. Coming up, Sarah Samuels will be joining us. She's head of investment manager research at NEPC. She can tell us what institutional investors, clients, large hedge funds are doing. Going to be quite interesting, particularly as we head towards the Fed after that sell-off in tech that we've seen over the last couple weeks. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading higher, NASDAQ and the NASDAQ 100 index fluctuating both in the red right now, with the S&P up by 5, up 0.1%. The Dow up 93, higher by 0.2%. Stocks higher as traders wade through fresh economic readings and corporate results while bracing for key central bank decisions that will be critical in shaping the trajectory of global markets. 10-year right now, 4.17%, with a 2-year yielding 4.38%. Again, the S&P up by 0.1%. Spot gold up $7 the ounce to $23.92, up by about 0.3%. And West Texas Intermediate crude now lower by 1.1%, now at $74.95 a barrel. WTI slipping below 75. Brent, meanwhile, below 79, 78.89 for a barrel of Brent. Consumer confidence rose in July on an improved outlook for the economy and the labor market, that according to the Conference Board. Dana Peterson is chief economist at the Conference Board. She was interviewed moments ago right here on Bloomberg Intelligence, and she talked to us about the report.
So with respect to goods, for the most part, they are not interested in buying homes or cars. They're a little bit more interested in buying appliances and also electronics, like PCs and laptops. But when it comes to spending on services, they're definitely down trading, and they're saying we're going to spend mainly on services we need, not things we want, and we'll stream instead of going to the movies.
Dana Peterson of the Conference Board. After earnings, Lattice Semiconductor plunging 8.7%. Rambus also reported last night. That stock now down by 8.3%. And PayPal, meanwhile, moving higher after earnings. PayPal shares up now by 8%. Recapping stocks mixed. S&P higher by 3 points, little change, up 0.1%. NASDAQ lower now by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. I'm Alex Steele here alongside John Tucker. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. So our next guest is going to give us a great perspective, sort of inside the mind of hedge funds and institutional investors and other clients. Joining us now is Sarah Samuels, Head of Investment Manager Strategy at NEPC. NEPC is one of the industry's largest independent full-service investment consulting firms. They serve more than 400 clients with over $1.6 trillion in assets under advisement. Sarah joins us now. Sarah, great to have you joining us from Boston. Thanks for joining us.
Alex, it's great to see you again. Thanks for having me on the show.
You bet. I also should point out, John Tucker, that Sarah wrote a children's book about financial literacy for kids.
Really?
Yes, which, you know what, you and I could probably use also.
I could probably use that.
I definitely could have used that
Are we
when I was
still
younger.
telling kids to save?
Actually, to go a step further than saving, it's telling them to be brave, take some risks, and try their hand at investing.
I think given the current rate environment, you probably have to go out a little.
Yeah. We'll get to that too, because my daughter very much enjoyed that book. But Sarah, for the pros, for the profesh in the market, what are people thinking and doing right now?
So the big theme that we're seeing among our clients at NEPC, and we work with endowments and foundations, we work with family offices, we work with public and corporate pension funds, we work with lots of different clients, and we help manage their entire portfolios across private markets, private equity, hedge funds, and anything publicly traded. So the big theme that we're seeing in our clients' portfolios today is that investors are getting less money back from their private market investments than they had expected and budgeted. And for distributions and deal activity to pick up, we really need to see valuations reset further, or for the cost of capital to come down, which we're beginning to see recently. And, you know, what we're really telling our clients is that this could be a great time to put capital to work.
Okay, so let's focus on the liquidity picture right now. What is it?
Yes.
What are the implications?
Okay, so when we think about why does liquidity matter, especially from private markets investments, because capital and liquidity for institutional investors is really necessary to fund their operations and to help these institutions achieve their missions. What are their missions? You know, this is something where an endowment will send college kids to school, a hospital system helps take care of the sick, a public fund or retirement system helps retirees live comfortably. And these big money institutions like public funds, endowments, foundations, family offices, they might have 20 up to 40 or maybe even 50% of their portfolios in private equity and venture capital and private debt and real assets. And so this drop in liquidity that we've seen, this drop in distributions relative to what they've modeled is really impacting their ability to support their missions. And so why are these exits lower? Why is there less liquidity today? It really has to do with a few things. One is the cost of financing. So it used to be 4 to 5% to take on debt in a lower rate environment for a buyout, for example. And buyout debt is typically floating rate. So now it's 8, 9, or 10%. And that really eats into the profitability of these underlying portfolio companies, and buyers and sellers cannot meet on price.
So that's a lot, though. I wasn't really aware that some of these foundations and family offices have as much as 40% or more, like 20, okay, maybe less. But 40%, does that number change now that they're having a hard time getting their money back, in essence? Does it change how they allocate?
You might think that they would be backing off. These are really smart investors, though, and they're very extremely long-term oriented. So one study by Collar Capital found that over 80% of investors plan to increase or hold steady their private markets exposure in the next several years. And so investors are showing that they really still believe in private markets. They are getting frustrated with a lack of distributions.
Does everybody agree on the valuations?
No, we do not agree on the valuations. And so we are seeing the M&A market begin to warm up again, as I'm sure you've been talking about on the show. And that's a function of a couple of things, but it's really starting to loosen up this transaction capability in the marketplace. And what's happening is that banks are beginning to re-enter the market, which is providing more capital at potentially a lower rate. And there's been a bevy of dollars raised for private debt funds. And private debt has been lending to these portfolio companies at 9 or 10%. Now there's competition for capital. So in a way, there's been a sneaky rate cut, which has found its way into the cost of debt financing. So that instead of costing 9% or 10% to take on debt for these types of strategies, it's more like 8 or 9%. And the cost of financing really has a lot to do with where we're able to exit a company and what we do to agree upon price. So there are a lot of buyers and sellers who are not able to meet in the middle. I believe we're going to get there, but the sellers may need to come down a little bit.
All right, this feels like a good moment, though, to pivot to your book. So I mentioned that you wrote a children's book for literacy for kids, Braving Our Savings. Can you tell us what it's about and how you deal with savings when it comes to your kids? Because, man, when she put me to shame when she was telling me about this earlier.
Well, thank you so much, Alex, for bringing it up. So the book is called Braving Our Savings. And it's a children's book. It's available on Amazon. It's available. I'm giving it away to lots of kids. If you know of any organizations that are serving underrepresented kids, please let me know. But the goal of Braving Our Savings is to empower kids from all economic backgrounds to invest and be brave. And we've had great support from really a trifecta. We've had endorsements from the investment community, so folks at NASDAQ, for example, and NEPC. We've had lots of partnerships, over 20 with nonprofits. And then the pro sports community has really stepped up in endorsing the book, like Alex Rodriguez, Kyle Arrington, Brandon Copeland, Jonathan Jones. These are Patriots players, and we all know Alex Rodriguez. And this has really helped to amplify the message and broaden our reach. So we've given over 2,500 books away to kids at this point, and we're just getting started.
Where is financial literacy right now? Just how big of a gap is there?
It's getting a lot better. So many more states are beginning to have it as an essential. Yes, it is promising. But the reality is that there's a lot of shame and fear around money when you get to the individual family level. And that because it's not taught in schools, it leaves the discussion to the dinner table. And many families just aren't equipped to have these conversations. So we want to sort of expand kids' families and become part of them and begin to show them things that maybe their core tribes aren't able to.
But what's so interesting, Sarah, is you talk about taking risk. kids investing in stocks, like that. I mean, you know, not on like a large scale, but like learning how to not only manage money, but make money.
That's right. And, you know, it's a really important skill to learn. And especially if you come from a place of not having much money as a child, you may be less likely to take risks, which just extends that cycle of making ends meet. Because if you don't take risks, then you may not be able to sort of have a step function change. And I've taught 1,700 kids live in the last 3 months. And I can tell you that they get it, even at a very young age. They are smart.
You're not talking about turning them into
there.
day traders, though, right?
Yeah, that's right. We need to be careful of that.
No day traders. Like there's still a risk element that we want to protect, but it's super awesome.
Investors.
Thank you. Sarah, thanks a lot. We really appreciate it. Thank you for the perspective, head of investment manager research over at NEPC, but also thank you for the book, Sarah, Braving Our Savings. I'll be buying one for John Tucker just after the break. Sarah Samuels joining us from Boston, Massachusetts. But it's such an interesting point. I mean, I remember I didn't know anything about budgeting or savings or how to manage anything until I bought like a book in my late 20s when I was in debt. It was like how to get out of debt. And that's when I started to learn stuff.
Hey, I would argue a lot of small business owners don't know it either, especially those like doctors and dentists. They don't teach you business in those schools.
Which you really should. And I like the idea that you're actually sort of investing to grow, not just putting money in a Citibank savings account, no offense to Citibank, but actually like trying to think about wealth in a different way. I thought that was really cool. Great. You know, you got to save up to buy that table saw. All right, coming up, we're going to talk to Michael Smith, senior reporter on Bloomberg's national team. And his article that Ken Griffin just spending millions to put his stamp on Trump's GOP. We're going to break that down. Coming up now, though, it's Michael Barr with World and National News. Michael.
Thank you very much, Alex. And John, North Carolina Governor Roy Cooper has pulled his name from consideration to be Vice President. Kamala Harris's running mate posting on X that the time is not right. Cooper may have been on Harris's long list of possible VPs, but Bloomberg's Mike Shepard reports the short list remains focused on 3 names.
Arizona Senator and former astronaut Mark Kelly, Tim Walz, the governor of Minnesota, and Pennsylvania Governor Josh Shapiro. And each of them brings a special strength to this competition for Harris. They can try to bring in some of the swing states that Harris will need to win.
Bloomberg's Mike Shepard reporting from Washington. Former President Donald Trump seemed to back away from his earlier commitment to debating Vice President Kamala Harris. In an interview with Fox News and Laura Ingraham, he said he probably will debate, but he can also make a case for not doing it.
I want to do a debate, but I also can say this. Everybody knows who I am, and now people know who she is. She's a radical left lunatic. She'll destroy our country. She wants open borders.
Then why not debate her?
Well, wait. But because they already know everything.
Former President Trump says if he does debate Harris, he'd like to do it before early votes are cast. The new acting Secret Service director will face tough questions from a Senate committee over the July 13th assassination attempt. Robert Rowe took over the department last week after Kimberly Cheadle resigned. At the Paris Games, organizers postponed the men's triathlon to tomorrow at least, citing insufficient water quality levels in the Seine River. In tennis, Coco Gauff lost in the 3rd round of the singles. Overall medal count, the U.S. leads at 20. France has 16, and China has 13. Global news 24 hours a day and wherever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we got the S&P churning. Little change, down by a point right now, swinging between gains and losses. Dow Industrials up 144 points, up 0.4%. NASDAQ in the red, down 64, down 0.4. NASDAQ 100 index down 0.3. And the Russell 2000 index higher by 0.3%. 10-year 4.17% with a 2-year 4.38%. Gold up 0.4%, 23.92 the ounce, and West Texas Intermediate crude down 1.4%, 74.75 a barrel. Stocks are little changed as traders wade through fresh economic readings and corporate results while bracing for key central bank decisions that will be critical in shaping the trajectory of global markets. Fed officials, in fact, meeting today and tomorrow in Washington with U.S. interest rates running at two-decade highs to whip inflation. Bloomberg's Vinny Del Giudice has more.
This week's big question is how clearly the Fed will signal a September rate cut. No change is in the cards this week based on Wall Street sentiment. Bloomberg Economics suspects Fed officials will offer tentative hints as they parse through fresh economic data. Now here's something Fed-related that could bring a smile. Citigroup says stocks and bonds have posted weekly gains amid 6 of 8 Fed meetings over the past year. Vinny Del Giudice, Bloomberg Radio.
A year after Warren Buffett called his multi-billion-dollar bet on Bank of America an investment worth keeping, he is now selling some. Buffett's Berkshire Hathaway disclosed its third disposal of shares this month, pairing its massive profitable bet on the lender by a total of more than $3 billion. Bank of America shares, they're up now by 1%. Berkshire, the Class A shares, they're also higher up now by 1%. Again, recapping, S&P lower, little change, down by less than 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. I'm Alex Steele alongside John Tucker. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We also have an amazing print team here at Bloomberg, and they literally cover everything around the world, particularly when it comes to money and politics. What's not to like about that combo? Michael Smith is joining us now. Senior reporter on Bloomberg's national team is joining us on Ken Griffin spending boatloads of money to put his stamp on Trump's GOP. Michael, walk me through the piece. It's today's big take, which you definitely want to listen to and read. Walk me through what you learned.
Well, what we learned is that Ken Griffin is one of the most influential donors to the Republican Party in America. In the last 10 years or so, he's donated almost $250 million to Republican causes and candidates. And this year alone, he's spending tens of millions of dollars to back the Republican primary candidates that he really likes, that sort of share his conservative, pro-business views. And sometimes that sort of clashes with the Republican Party that Trump has shaped, which is much more populist in orientation.
Just to remind everybody who Ken Griffin is, where he gets his money from.
Yeah, so Ken Griffin is he's worth about $42 billion as of late. He's the founder and owner of Citadel, which is one of the largest hedge fund and securities trading firms on Wall Street in the world, actually. And he's incredibly influential in terms of philanthropy. He gives a lot of money to a lot of different causes. And in terms of politics, he's quite outspoken, Republican, pro-Republican backer, so to speak. And he regularly zooms in on political issues that he cares about, and he backs it up with his money.
Is this just a Trump thing, or is this a Republican ticket thing for Ken Griffin?
Well, it's really, he says his goal is to get people elected who will govern well, who will get things done along, in the areas that he's really interested in, like defense, promoting the American dream, he likes to say, which is a whole sort of coterie of economic policies that he believes in, and not obstructing good legislation. Like he's given the candidates who have challenged a lot of the Freedom Caucus members in the House who have been sort of disruptive over the last few years. He doesn't seem to want that kind of legislature in the Congress. So he's directed his money at candidates along those lines. A lot of times it jives with what Trump wants. He's backed a lot of Trump endorsed candidates, but not all the time. So he really seems to be forging and says he's forging his own way.
What does he say about Donald Trump, or does the money do the talking for him?
Well, according to the most recent disclosures that we've been able to find, which are as of this month actually, he hasn't given any money directly to Trump, and historically he hasn't given money to Trump, and he's but he had it's not, he hasn't come out directly against Trump. Mm-hmm. He says he's still deciding, I think, and still sort of to be announced at whatever step he takes by election day. But he's been quite careful not to directly finance Trump's campaign, at least so far from what we can see.
Now, it's easy to talk about, Ken Griffin supporting the GOP, but, there's some billionaires also on the Democratic side that also put a lot of money into these super PACs and stuff, right?
That's correct. This is not a Republican thing. And ever since, the Supreme Court made some rulings in the mid-2000s that basically allowed individuals to give as much money as they want to so-called super PACs. These are political action committees that back a cause or find ways to support candidates. You've got money pouring in from all sides. So this is quite common. And Ken Griffin just happens to be one of the biggest ones on the Republican side.
So what's his track record of the candidates who've received his money? Has he been successful in getting them elected?
Well, our reporting shows that he's supported about 60 candidates, either via these massive infusions of money to super PACs that in turn support them, or directly as an individual supporting a candidate's campaign. Under federal law, you can give up to $6,600 per cycle to a candidate directly, but you can give unlimited amounts in support of a candidate through a PAC that targets that campaign. So anyway, he's supported about 60 candidates, and roughly 2/3 of those have won their election. The others, we'll see what happens.
Is he a single issue kind of donor? Like, is there one thing that he really stands for that he's pushing for all the candidates that he's supporting, kind of thing?
Yeah, he says no, it's not single issue, I would say. It's sort of a package of things. I mean, he cites a number of different things in his comments to us, for example, and just sort of through the reporting that we were able to do, securing the borders, halting and reversing inflation, protecting young people from war, from going to war, and also encouraging the American dream. So those are pretty sweeping concepts.
Yeah, I was like, that's not very specific, but sure.
Yeah, but but that's how he describes what he's looking for. And in effect, that's kind of the kind of candidates you're seeing. Traditional conservative Republicans that he believes fit that mold that I just described.
And money left over to buy a Stegosaurus.
And didn't you buy something in the south of France? Wasn't it a boatload of millions or something? Probably.
Yes, he just bought a modest home in Saint-Tropez. I think it's worth more than $90 million. And he just bought in auction a complete Stegosaurus skeleton for $45 million.
We just don't know if the Stegosaurus is going in his Saint-Tropez house.
No, I think he's actually donating that to a museum.
Yes,
Hey, Michael.
He's going to donate it to a museum.
Michael, you got to leave it there. We really appreciate it. Michael Smith joining us from the Bloomberg National team. I should point out it's not a big take, my bad, but it is a Bloomberg little beat, which means it's an exclusive to Bloomberg News. Definitely check it out by Michael Smith and Bill Allison about Ken Griffin and his contributions to the GOP and really shaping that party.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word from JetBlue that it is canceling its Investor Day that had been set for the fall. It says it will detail its strategy now instead of at that Investor Day. JetBlue shares are surging. Right now, JetBlue, after earnings this morning as well, up by 22.6%. Sprouts Farmers Market shares, they're up 15% after the natural and organic food retailer boosted its full-year projections for comparable sales and profit. BofA upgraded the stock with a $100 price target. Wells Fargo has upgraded the stock with a $90 price target. Right now, Sprouts at $97.65. Again, the stock surging by 15.3%. Microsoft says it is investigating outages of some Office applications and services. Microsoft says the issue is impacting multiple Microsoft 365 services and features. Microsoft 365 includes common productivity applications like Outlook, Word, and Excel. And Microsoft will be reporting earnings after the close of trading today. The stock down now by 0.3%. Also reporting after the close of trading, Advanced Micro Devices, those shares down now by 0.4%. Last night we heard from Lattice Semiconductor. Lattice Semi lower after the chipmaker forecast revenue for the third quarter that came in below the average analyst estimate. Lattice shares now down by 9.1%. And also reporting last night, we heard from Rambus, the technology forecast, the technology company forecast product revenue for the third quarter below estimates. Rambus right now down by 10%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, happy Tuesday, everybody. I'm Alex Steele alongside John Tucker. Paul Sweeney's off today. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker studio right here in Midtown Manhattan. You can also check us out on YouTube. We also keep you up to date on world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex. And John, Vice President Kamala Harris continues to raise money for her campaign. Democrats Pete Buttigieg and J.B. Pritzker join actors Jeff Bridges, Mark Ruffalo, and about 200,000 others to kick off campaign fundraising efforts by a new group Monday, White Dudes for Harris. The call on Zoom raked in more than $4 million, including cash and merchandise sales, according to an emailed statement from the organizers. North Carolina's Governor Roy Cooper was on the call.
If white males would vote 1 to 2% more for Democrats than they usually do, then we win this race.
Meanwhile, Governor Cooper pulled his name from consideration to be Harris's running mate, posting on X that the time is not right. Donald Trump says he expects to debate Kamala Harris. The former president hasn't committed to a debate, but he was asked about it on Fox News.
The answer is yes, I'll probably end up debating. I think actually the debate should take place before the votes start being cast.
Former President Trump says a case can be made for not debating Harris. Trump says everybody knows who he is, and he called Harris a, quote, radical left lunatic. California's park fire is now the 6th largest in the state's history. It's grown to 368,000 acres. Cal Fire Public Information Officer Sergio Arellano.
There was a lot of fuel in the area where the fire started, and coupled with the winds, where we've seen a little rise in wind, over the previous fire seasons, that I think it was just the right recipe to get this fire going and going really quickly.
Fire official Arellano says the blaze was started by a man who pushed a flaming car into a gully. At the Paris Games, organizers postponed the men's triathlon to tomorrow at least, citing insufficient water quality levels in the Seine River. In tennis, Coco Gauff lost in the third round of the singles. The overall medal count for now, the U.S. leads at 20, France has 16, China has 13. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex and John and Charlie.
All right, thanks so much, Michael Barr. I mean, can you imagine being ready to do the triathlon in the Olympics? Like, you trained for however many years, you're ready to go, you're eating whatever, protein breakfast you have, and you're sitting there and you get news that it's canceled again.
Because the river is dirty.
Yeah, after authorities spent over 1.4 billion euros on new infrastructure to clean up the river, but then you've had a streak of rainy days, and that can lead the city's sewage system to overflow, which then brings waste and water and bacteria back into the sun. Remember that opening ceremony had that heavy rain that was basically there the whole time, and that persisted into Saturday evening also. So, I mean, and what do? There's no plan B.
Well, the mayor, remember, the mayor had taken a swim.
Hidalgo, yeah, she took a
Has
dip
she
in
been
it.
seen since?
Yeah.
Oh.
Now but she did take it before all the heavy rains happened. So
Right,
and
so
she came off
that
on it.
was good before, but also there needs to be a system in case there's rain, no?
Yeah, well.
Well, I mean, remember now, the saying, what, almost a century, you couldn't swim in. It was against the law to do
Right.
that because it was so. Yeah.
Well, it was basically an open sewer, so.
Well, and then the other part is like it's really hot now. So it's like 100 degrees Fahrenheit on Tuesday, the hottest since 2022.
And
Yeah.
so the decision by the U.S. athletes to demand air conditioning.
They look smart now, don't they?
Everybody's hanging out in their rooms.
Yeah. Yeah, and by early Wednesday morning, temperatures are only going to drop to about 24 Celsius. So if we go by Paul Sweeney's thing, that's like high 80s. So it's still going to be super hot tonight. I'm definitely going to be watching the women's team finals of gymnastics at 12:15 Eastern. I mean, I'll be working and stuff, but I'll also maybe be watching a little bit of that women's gymnastics. All right, coming up in the next hour of Bloomberg Intelligence, we're going to break down some of the market drivers within the market. We'll also talk to George Ferguson of Bloomberg Intelligence on that JetBlue earnings. Man, that stock is soaring.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. Happy Fed Eve, I guess I can also say. I'm Alex Steele here with John Tucker. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We bring you all the news that you need in business, economics, and finance, and we do it through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies in 130 industries worldwide. They're really amazing. We are broadcasting to you live for Interactive Broker Studio right here in Midtown Manhattan, where it is not 100 degrees anymore. That's saved for France tonight. Well, Paris tonight.
Did you say Fed Ease or Fed Eve?
I said Fed Eve.
Eve, okay.
Are you saying my enunciation is not good?
No, I'm just wondering.
I said Fed Eve.
Because that's an important distinction.
It is an important distinction. That's why we love the John Tucker. All right, we also give you some business flash here to keep you up to date on everything that you need. For that, we go right to Charlie Pellet.
Thank you very much indeed. On the eve of the Fed meeting, we have got the S&P. I couldn't resist. We got the S&P and NASDAQ both declining. S&P right now down 14, drop there of 0.3%. Your Dow Jones Industrial Average up 130, up 0.3%. NASDAQ now down 124 points, down 0.7%. The NASDAQ 100 index also down 0.7%, but the Russell 2000 index of small cap shares holding on to a gain of 0.2%. 10-year right now 4.16%, with the 2-year 4.37%. Gold up $5.50 the ounce, up 0.2%, $23.89 for an ounce of gold, while West Texas Intermediate crude down 1.3%. WTI 74.79 a barrel. As for the overall earnings backdrop, Ross Mayfield is investment strategy analyst at Robert W. Baird, and he was interviewed this morning on Bloomberg Surveillance.
I think there's some demand weakness around the globe. I don't think this is a booming economy anymore by any metric, but it's a good enough economy for what we need to see out of earnings and out of the market. On the cost side of the balance sheet, you're also seeing wages at a much more manageable place for companies. So I think this is a much more about profit margin protection, about operational efficiency than it is top line growth.
Ross Mayfield of Robert W. Baird interviewed this morning on surveillance. Of course, after the close of trading today, we hear from Microsoft and Advanced Micro Devices. Tesla is recalling more than 1.8 million vehicles because of a hood issue that could increase the risk of a crash. We've got Tesla shares trading lower right now. Tesla is down by 1.9%. So again, recapping, stocks are trading mixed. The Dow higher by 0.2%, S&P lower by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot, Charlie Pellet. We appreciate that. I'm Alex Steele alongside John Tucker. On the headline level, markets are boring. Underneath, though, really interesting stuff happening with individual companies with some very big moves. And Billy Lipschultz, Bloomberg News senior equities reporter, is in the studio to help us break that all down. Okay, what are you looking at now? PayPal is really helping to lead the. That's doing really well in the S&P.
Yeah, up 7.25% right now. Had jumped as much as 10%. Again, as you mentioned, this comes despite the S&P down about 0.5%. Really rallying after boosting its profit outlook for the year. Free cash flow for the full year now about $6 billion, had seen $5 billion. Also saying their full year adjusted EPS will be in the low mid-teens, so call it 12 or 13. They had seen mid to high single digits, so that's quite a jump for the company. You're seeing stocks like Block and Marqeta outperforming the market so far this morning. They're not seeing the follow-through that PayPal has.
But it's how they're doing it that has me a little concerned.
Tell me.
Well, they're cutting costs. They're not growing.
It's the same thing as the JetBlue story, right? You know, you cut your costs. I know you guys are going to go more in depth on JetBlue, so I'm interested to hear what Bloomberg Intelligence has to say about that. But you see, to your point, the gross profit beat coming in. Though I guess you could look to, if you really dive into it,
Slimming down, let's say.
Slimming down, there were lower transaction costs, so maybe that helps kind of bolster the potential bull case. But when you think about it, we're looking at a market that has rallied over the last 12 months. PayPal down 16%, so about a 35% point spread between the S&P and PayPal stock.
That was an Elon Musk company early on, was it not?
Yeah, I believe so.
Merck. Let's go to Merck.
This Merck sell-off has gotten a lot uglier really quickly. Stock down 10%.
I would point out that it's Rahway, New Jersey-based Merck.
That's important.
I have been to their facility. I actually knew they were in New Jersey.
It's right by the railroad tracks.
Yeah, not far at all.
Okay.
There actually is a lot of large healthcare or biotech in New Jersey.
Yeah, New Jersey's big for that.
Yeah.
So Merck's down 10%.
Down 10%, biggest drop, similar to P&G earlier, biggest drop since March 2020. Looking at the results, biggest drug for them is Keytruda, massive cancer drug, beating expectations. But the weakness has been seen in Gardasil, a vaccine used to prevent human cancer-linked papillomavirus, PPV.
Yeah,
I'm not a parent yet, so I don't know how to say these words. But basically, the sales there, according to some of the sell side guys I've been talking to, in line or slightly below what Wall Street was looking for, given supply issues in China. Also, had been hearing from a couple folks on some trading desks who said that whisper numbers for some of their newer drugs, Winrevair, can't make drugs that anyone can say.
No, totally.
Slightly below whispers, despite an optical beat ahead, but still in the early innings, given $70 million is a drop in the bucket for what people think that'll be.
Did you say you're not a parent yet, so you don't know how to say?
Human papillomavirus.
Is that what you said? Because you're not a parent yet. We as speaking as collective parents. First of all, I don't know how to say that. We just say HPV is what we say.
He'll learn.
One day I'll catch up. Today's not that day.
No, today's not that day. Yeah, that stock really getting hit. Sprouts Farmers?
So small cap. We had talked about JetBlue earlier, which is way smaller than I remember it being, below $3 billion. Sprouts Farmers opens and operates food and drug stores, catering to organic food. Really popular where I'm from in California. Stock up right now 15%, trading at a record high, actually beating expectations. And the strong growth from a same store sales perspective drew both Wells Fargo and BMO to upgrade. Wells Fargo bailing on their bearish rating, as did BMO, basically saying that even if the risks that they've laid out from a competitive standpoint, even if those play out, the company's fundamental business is still strong enough to keep driving to the upside. That stock on a 12-month average, or a 12-month trailing average, 12-month basis, can't speak, up 147%. So strong move higher. This company is now valued at $9.7 billion. So if you
what do they sell?
It's a grocery store, but it's all organic.
Fancy food.
Organic and fancy food.
You don't shop there.
No, I don't. Well, I grow my own on the deck. The lettuce and tomatoes, and they're awesome.
What else do you grow?
That's it, Bailey.
I didn't know.
What is
Like,
your
what
implication?
more do you want from me? Are there different types of tomatoes? We want the details.
The small cherry tomatoes and romaine lettuce.
Nice.
Yeah.
Excellent. All right, party at Tucker's house with his table saw and romaine lettuce and tomatoes. All right, Bailey, thanks a lot.
Yeah,
Bailey Lipschultz
chop up
joining
the
us.
tomatoes with the table saw.
So cool. Bloomberg News senior equities reporter joining us there. Let's get back to JetBlue. The stock still holding strong here, up by almost 20%. It's deepening its cost cuts in this turnaround plan that it's going through, right? If you can't beat them, join them. And if you join them, you're cutting costs. We're going to George Ferguson now, Bloomberg Intelligence senior aerospace, defense, and airlines analyst on this. Are you surprised by the extent of the stock move here based on the news?
I am a bit. So it makes you wonder, too, if there wasn't a fair amount of short activity in here that's probably trying to get out of the way when things move this quickly. But still, I think that what JetBlue is presenting today is definitely the right way forward, right? I mean, it's all about lowering capacity, firming up fares, and they already have the Mint product that's a premium product that ought to help them bring in some better revenues. So I think it's the right way forward. I just think the move is probably a little bit dramatic.
And they've cleared a day on your calendar, George, because they've canceled Investor Day. That can't be a good sign.
Well, yeah, I think when companies have less exciting things to talk about, they can Investor Day. We saw United can it earlier, before this earnings period. It made me think there's something going on. So, yeah, agreed. But again, my guess is we have a lot of the bad news out for the airline industry now. It's a function of getting people to cut capacity, which are going to improve fares, and so they may just, short of that, they may not have much else to talk about.
So they increased to 15 the number of cities where they're ending service, and they've already cut more than 50 routes. So the growth prospects for this airline aren't that great.
Well, and you watch them again defer airplanes, which I largely think are all about growth. There's some replacement of that. But you wouldn't defer airplanes you needed for replacement. So essentially, I think their fleet plan told us, too, that they're not a lot of growth. Yeah, I mean, I think we're back to that old question about what is JetBlue going to be when it grows up, right? But I think near term, you got to make sure you keep the balance sheet in good shape and get the income statement healthy, and then you can start to think about what are your long-term options? What do you want to be?
So you have the top line, and then you have the cost-cutting measures and the streamlining, which is going to wind up helping to support, as you mentioned, the balance sheet. When do you think that they tackle that top-line question then?
Sorry, I didn't catch that. The what line question?
The top line question? Like actually growing here and becoming the company it's going to be.
Well, look, I mean, I think this summer, again, we just see too much capacity, and so it's going to be really hard to grow that top line. I mean, and then, with the cuts they're bringing, my sense is they don't see this market being ripe to be growing strongly, and at least strongly, right? They're still taking aircraft, and so they're still growing to a certain degree, but they're not looking to grow like they were in the past, and it tells me, they think this could persist even into, I guess, next year and the years following. I think that's a pretty long way to look out. So, I'm not sure all the drivers behind cutting things in 2026, 2027. But, when do they figure out what they want to be in the long run and how to grow that top line in a large way? I don't know. That's a good question. I don't have an answer to that one.
Is Southwest something of a template for JetBlue?
I'd argue that JetBlue is already further down the road on premium and on revenue generation than probably Southwest. Southwest, to me, seems like an airline that needs to become more like a full-service carrier. Their costs are just as high. They run the entire length of the country, right, and do a bunch of the near-term international markets. So to me, I think Southwest started looking more towards the full service and has got to sort of keep going there, given their footprint. JetBlue's too small. Like JetBlue just isn't. They're a niche carrier. They're not a full service carrier. East Coast, New York, expensive cities of the East Coast. They've got this niche and it's great stuff. But yeah, again, the question is, where do you go from there?
All right, George, great stuff. Appreciate it. They definitely don't want to be compared to Southwest.
Long Island City-based JetBlue.
There you go.
I should point
All right, George, I'll be talking to you later because Airbus is also reporting earnings in just about 2 hours' time. George Ferguson of Bloomberg Intelligence, a senior aerospace, defense, and airlines analyst, joining us there. All right, another top story that we're tracking here is Warren Buffett cutting his B of A stake, unloading about $3 billion this month. This is the third share sale of B of A in July. We're going to go more now to Matt Palazzoa, Bloomberg Intelligence senior analyst, PNC Insurance, joining us on the story. Matt, what did you learn? What do we think of this? Like, is this like a feeling of how Buffett feels about B of A, or is this just, hey, man, got to trim some stakes?
Yeah, I don't think so, Alex. I wouldn't read too much into it. For context, the share sales are about 7% of the holdings of Bank of America. So the $3 billion is about 7% of what they own.
Well, what did Berkshire say in this decision, or did they say anything?
They don't say anything.
I mean,
so,
what do you read into it though, beyond that?
What I would read into it is, if you recall, perhaps earlier in the first quarter, they sold about 13% of their Apple shares, and that's their biggest holding. At the annual meeting, Buffett kind of implied that he might be expecting some tax changes later in the or next year, so he wanted to lock in gains now at a lower tax rate. He didn't say that outright, but he kind of implied it. So I think he might be looking at the same thing here.
Well, Buffett has also said something to the extent that the investable assets out there have declined, right? There's not a lot that he'd want to put his money into at
Correct.
this point.
So just in terms of, number one, equities, and number two, the acquisitions that they like to do. As far as the acquisitions, they're getting bid up a lot. So and Berkshire really doesn't compete on deals, so they've bemoaned that a lot. So there's a lot of competition in the market for buying whole companies, number one. And number two, just he's been kind of negative on valuations for a long time, just of the market in general.
Without Charlie Munger, how is he doing?
He seems, I got to say, the tone at the annual meeting was definitely somber. He's talked about slowing down. He's talked about passing on questions to Greg Abel. So, it definitely, half of the duo being gone, I think, takes away a little bit of the mystique and maybe a little wind out of his sails.
With the, we learned most about Berkshire Hathaway and its investments, through regulatory filings?
Exactly. So they have 13F filings. They have to file quarterly. They also file their 10Ks and 10Qs, and that's where we see this stuff. Sometimes Buffett will be in a press interview, and he might let some stuff out. But generally, they don't communicate with analysts in the street, so it's all through these regulatory filings that we'll see some stuff.
How's the stock performance of the company?
It's been good. I mean, it's been outperforming the S&P. It's been well among insurance stocks, if you want to call it an insurance stock. On the strength of Apple's gains, sometimes it goes up. So in the first quarter, Apple stock, their holdings of Apple stock probably up. I think it's to $20 billion or something, so it's going to juice their book value by a significant amount in the first quarter.
What is PNC Insurance?
Property and casualty insurance.
Okay,
so
and that is the bread and butter of Berkshire Hathaway, can we say?
That's kind of the engine that generates a lot of the investable flow, and that was kind of the first business. So they're in auto insurance, which is Geico, which falls under PNC Insurance, reinsurance, which is insurance for insurance companies, and then have the straight PNC Insurance. And that, typically an insurance company will get the premium money in, and they'll invest in fixed income, and they get a float on that, right? But what Berkshire does is, since they have such financial strength, they're able to invest it in equities. And it's very different from a traditional insurance company, but that has been the engine that has driven the capital generation of Berkshire.
And what's the overall state of the insurance industry, the PNC?
PNC, it's okay. So
Not great if you're in California.
No, so we've got increasing frequency and severity of natural disasters happening, right? That, coupled with the increase in property values across the country, has really been leading to these outsized losses over years. But the industry is well capitalized. Yeah. They're at kind of peak ROEs this year, so the insurance companies are doing all right.
We appreciate you. Thank you very much, Matthew Palazzoa, joining us. He covers P&C insurance for Bloomberg Intelligence. He's a senior analyst there. Coming up, we're going to go to my fun space, which is the commodities market, natural resources market.
Oh, I thought you were going to say something like, you know, the movies.
Oh, no. We did Deadpool yesterday. Today we can do natural resources. Tyler Rosenlicht is head of natural resource equities, joining us from Cohen & Steers in just a moment to break down the energy market. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow holding on to gains of 0.3%, up 109 right now. The S&P, NASDAQ 100 index, all trading lower. Big tech selling off. We have got the Russell 2000 index of small cap shares holding on to a gain now of about 0.3%. A sell-off in the world's largest tech companies, sending stocks lower. Traders also bracing for central bank decisions. that will be critical in shaping the path of global markets. S&P down 22 now, down 0.5%. We've got NASDAQ down 164, a drop there of 0.9%. 10-year 4.16%, with the 2-year that's yielding 4.37%. Spot gold, little changed, up by about 0.1%, 23.88 the ounce. And West Texas Intermediate crude down 1.4%, trading below $75 a barrel. WTI 74.81, barrel of Brent below 79 at 78.65. All eyes will be on Microsoft after the close of trading. Microsoft ahead of earnings, down 0.9%. AMD will also report after the close, down 1.9% right now. Meta Platforms reports tomorrow. Meta little changed, up just under 0.1%. And then perhaps the big event on Thursday, Apple and Amazon, both of those stocks are trading lower right now. So again, recapping here, we're looking at a decidedly mixed market. The Dow holding on to a gain. The S&P and NASDAQ both selling off. S&P down by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you very much. I'm Alex Deal alongside John Tucker. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics and commodities, because you know me, I love commodities. Looking at the oil market here, it's down by over 1%. You also have aluminum down by over 1%. Overall, this sector's been hit quite hard. I mean, oil's at near a 7-week low. It really does feel like the likes we've heard from, say, Heineken, the weaker readings over in GDP in Germany, all of that circles around China and the lack of demand there. There's also, though, some still interesting investment opportunities within the sector here. You're just looking at the S&P Energies Index over the last 6 months. It's up a healthy 8.6%. And many say, you know what? The commodities may have its moment in the sun right now as we head into the back half of the year. So you wanted to talk to someone with some money in the ground. That's funny. Money in the ground? Yeah, let's go for it. Do we like that?
Okay.
Hard assets, real assets? All right.
Will it grow
Tyler
in the ground?
Tyler Rosenlicht is head of natural resource equities over at Cohen & Steers. He joins us now in the studio. Cohen & Steers is a leading global investment manager with about $80.7 billion in assets under management that looks at diversified real assets and energy broadly. Tyler, welcome.
Thank you for having me.
What do you make of this energy space right now?
Yeah, we think there's a lot of tension going on in global energy today. Clearly there's questions about long-term demand for traditional resources and obviously all the growth that we see in alternatives as we pursue a global energy transition. When you talk about oil prices here and now, one thing that we've been spending a lot of time on is, obviously demand does seem like it's weakening, but we think some of the weakness in crude is really more supply related. As we look at global oil supplies into 2025, we actually see a lot of supply coming not just from OPEC, but from North America and from other non-OPEC producers like Guyana, like Brazil, like Namibia, and so forth. So oil feels a little bit challenged here, but we always take a step back and say, people hear the word energy and they think oil. And oil is not the only part of global energy markets going forward. I mean, oil is a big driver of production and energy supply, but natural gas is growing a lot. Nuclear is growing a lot. Alternatives continue to grow. And so we think that there's things that look really good and things that look a little more challenged as we head into next year.
How much does China control your life as an investor in oil and energy?
It's funny. Today, it's a lot less about China as you think about energy and way more about AI and the demand that we see for energy broadly. So when you talk about an oil molecule, clearly China is a big driver there. But when you're talking about energy broadly, it's really about all energy supply. And can we provide the electricity and the other energy resources that we need to satisfy technological advances, to satisfy a rising middle class globally, urbanization, desire to travel, and so forth. So here and now, I think everybody thinks China's slowing. It's really more about, hey, is energy intensity changing in other ways, and how's that going to drive things?
And you brought in AI, and that, in essence, is the data centers need a lot of energy in order to run. I keep reading information that, yes, the power demand is going to be huge, but we're maybe overestimating that demand right now. How do you view it as an investor?
Yeah, so we think about sort of long-term cycles as much as we can, and we spend a lot of time thinking about what the future of energy is going to be, and we start with where demand is going to go in the next few decades. So we built a model that says, what is energy demand going to be in 2040? And there's really three factors that you would care about. The first is population growth. Basically, more people in 2040 means more energy consumption. The second would be economic growth. Bigger economy, more energy consumption. The third one is a trickier one, which is the energy intensity of the global economy. Basically, how efficient can we be consuming energy to generate economic growth? We've been of the view that we are going to get a lot more energy efficient. Technology's changing, costs are coming down, there's desire from governments and consumers to be better users of energy. I'm a little bit worried about that assumption, to be honest. It does feel like the economic growth is becoming more energy intense, as a lot of this technological growth is going to be really high energy usage. So, we've thought that the demand for energy was going to rise a lot. And candidly, we think we might have underestimated it. Now, there's huge expectations for AI in the short term and what that might mean for energy demand. Are those overstated? Potentially. But in the very long term, we think we are in an energy addition world. We really need to add as much supply as we can.
When we're talking about oil, we're not just talking about energy. We're talking about all the other stuff that oil make. I brushed my teeth this morning. Oil was in my toothpaste, and it was used to make my toothbrush. And that's just the start of it. I mean, are you smart enough to tell me what the breakdown in a barrel of crude is? How much of that is used for energy, and how much is that used to produce all the stuff that
100% no.
Okay. How about you?
I mean, a lot of oil demand comes from transportation fuels. It's flying, it's driving, it's all that sort of stuff. Clearly, there's a lot of it that goes into every other product that we use. But when you talk about oil, it's not always just the oil barrel, right? You get a lot of those petrochemicals from what we call natural gas liquids, NGLs. When we think about energy, again, a lot of times the conversation becomes around oil prices. But as we think into the future, we think oil demand is going to keep growing a little bit, and then it sort of plateaus later this decade and declines a little bit in the 2030s. But huge increase in demand for natural gas for all the reasons that you laid out in terms of how it's ubiquitous in our daily lives, but then also as global consumers consume way more of all this stuff.
So what do you like right now? Like, what do you want to invest in?
Yeah, so we look at the world as, hey, it's not just, like I said, oil and gas. It's all of the energy value chain, which includes both traditional resources and alternative resources. And I'd say we see massive winners across both sides of the table. On the traditional side, we really like U.S. natural gas. We think LNG demand, as we export to global consumers, is going to rise a lot in the next few years. We also think the supply is going to be a little more curtailed into 2025 and 2026. So we like natural gas. We really like the Canadian oil sands, where we think it's very low variable cost. They've built their businesses to survive $60 oil, and we think they're generating a lot of free cash flow that they're delivering to investors. And we also like sort of integrated energy companies that are pursuing the energy transition themselves credibly, using their existing infrastructure and assets to help sort of drive emissions changes. I'd say on the alternative side, we are very bullish the companies that are building out the electrification assets and infrastructure we need to satisfy the sort of growing electricity demand, companies that build transmission wires and transmission lines and so forth. And we're also really bullish nuclear in the long run. We do think it's going to be about refurbishing existing nuclear assets and building new nuclear globally to satisfy the demand for low carbon energy.
Yeah, Bill Gates just broke ground on his nuclear power plant up at Montana, I think?
I remember. You remember?
I think that's right, yeah.
I mean,
it's a sodium-based nuclear power plant, which, sodium can capture a much more of the heat energy that is generated, and you can use it as a storage facility as well. So use that energy whenever you need it.
Wait, let me ask you this question. How much petrochemicals are in your toothpaste? Because I think you might actually know this.
I believe 5.87%. I don't know.
I was going to totally
You're
believe
looking at my screen. Where's he getting that from? No, but it is in your toothpaste.
I know.
It's in everything,
you use. Tyler, when you talk about integrated companies that are really taking the energy transition seriously, well, what's your judgment case on that?
Yeah, we think a lot of energy companies are generating a lot of cash today, and the opportunity cost of that cash is fairly high. Investors are sort of requiring it to be paid out in dividends or via stock repurchases. But I think what people forget is energy companies own hard assets. They might own pipelines in the ground that you can convert to move hydrogen. Or maybe they're experts in developing large-scale infrastructure projects, which part of it is energy, but part of it is, can you deal with permitting? Can you deal with government regulations? Can you finance large wind projects and so forth? So for us, it's about, hey, what is your competitive advantage? Can you utilize your existing labor force or your existing asset base to actually pursue alternative investments at accretive returns? And we think there's some companies that definitely can. There's some that won't. There's some that will do very silly M&A. They'll destroy a lot of capital over time, but those that get it right, we think, will be great leaders in the next decade.
All right, Tyler, thanks a lot. Really appreciate it. Super interesting. Tyler Rosenlicht, head of natural resource equities over at Cohen & Steers. We didn't get to this point, but also how much of that's going to be dependent on policy from governments, too, to know that which sort of bets you're going to make on the energy addition or transition is going to work.
I'm not even sure we have an energy policy or what it is in this country.
Well, for the IRA, we have an everything kind of thing. Like, that's throw money in a lot of different things and sort of see what sticks, which makes some very nervous, because if you put things in the wrong area, then you're going to be wasting time. Anyway, much more on that coming up. All right, Tyler, thanks a lot. All right, we're also looking at Microsoft here. That stock now down by about 1%. It's reporting some outages of some office and cloud services. We're going to talk to Anurag Rana of Bloomberg Intelligence coming up next, right before they report earnings. But here's Michael Barr for World and National News.
Thank you very much, Alex. And John, the acting director of the Secret Service, is testifying about why the roof used by the gunman in the assassination attempt of former President Donald Trump was not secured. Ron Rowe.
I cannot defend why that roof was not better secured.
Rowe became acting director of the agency last week after Kimberly Cheadle resigned. Pardon me, folks. North Carolina Governor Roy Cooper is talking right now about taking his name out of consideration to be Kamala Harris's running mate.
All right, so we're not going to torture you any further. I'm going to give your voice a rest and just let you know about the economic data. Just briefly, the Conference Board, among some of the stories we had earlier, the Conference Board reporting its Consumer Confidence Index advancing this month, led by optimism about the labor market and the economic outlook. Also, the Labor Department data on June job openings, the JOLTS survey topping forecasts today, while May's tally, that was revised up. And looking ahead, we're going to get the July employment report. That will come out Friday. And, of course, tomorrow, the FOMC, the Fed meeting, the two-day meeting, which started today, we'll get the results of that. Bloomberg's Ira Jersey says he doesn't think that the Fed will be signaling a rate cut come for the Fed meeting in September. That is clearly not the consensus view. As we look at the markets right now, the S&P 500 down 28 points. That's a decline of about 0.5%, 54.35 on the index. The Dow Jones Industrial Average right now up 64 points. That is a rise of 0.2%. We're at 40,603. And the NASDAQ 100 down 198 points. You're listening to Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The S&P, NASDAQ, both lower. The Dow holding on to a gain. A sell-off in the world's largest tech companies, sending stocks down. Traders also bracing for the Fed decision tomorrow, along with other central banks. Those decisions critical in shaping the trajectory of global markets. Right now, the S&P is down 36, down 0.6%. We've got the Dow up 53, up 0.1%. A lot of weakness in tech, with NASDAQ down 1.3%. The NASDAQ 100 index also lower by 1.3%. And the Russell 2000 up by 0.1%. 10-year 4.16%. The 2-year 4.37%. Spot gold up $1.60 the ounce to $23.86, up 0.1%. And West Texas Intermediate crude down 1.5%, $74.71 for a barrel of WTI. Lots of economic data this week, including the closely watched jobs report on Friday. Mona Mahajan is senior investment strategist at Edward Jones, and on surveillance this morning, she told us she does see a soft landing for the economy.
So we see, not the 3.5% economic growth annualized figures we saw last year, but maybe it's 1.5% to 2% going forward. But those positive numbers still mean that we are executing a soft landing in the economy. That is one of the tenets you need in place in order for markets to be supported and for that broadening of market leadership to continue.
Mona Mahajan of Edward Jones interviewed this morning on Bloomberg Surveillance. A year after Warren Buffett called his multi-billion-dollar bet on Bank of America an investment worth keeping, he is selling it down. Buffett's Berkshire Hathaway disclosed its third disposal of shares of this month, but today Bank of America up by 1%. Shares of Berkshire Hathaway, the Class A shares, they're also up by just about 1%. So again, recapping, stocks lower. Microsoft after the bell, S&P down 0.7. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. I'm Alex Steele alongside John Tucker. Paul Sweeney's off today. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics through your lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries around the world, and one of them is Anurag Rana, Bloomberg Intelligence Senior Technology Analyst, and he's joining us to look ahead to Microsoft earnings, but also what is happening right now. Microsoft is down almost 2%. NVIDIA is off by over 6%. Tech is starting to get hit very hard. Anurag, what's going on?
So I think if you look at it, since the launch of ChatGPT, year and a half ago or so, almost 2 years ago, we have seen a massive run-up in all technology stocks, except especially the largest and the biggest ones. And what we've saw today and what we've been seeing for the last 2 to 3 weeks is just a big rotation from the large cap into the small cap. And I think that's really what's driving a lot of this thing. I don't think there is anything more than that particular element.
So what's the key number when Microsoft delivers results after the close?
Yeah, see, Azure cloud growth remains the most important factor for Microsoft when they report tonight. This figure grew 31% last quarter, and Street's expecting between 30 and 31% right now. So I think that's the first number we will look for. And the second part would be what kind of guidance they give on the conference call as to what would be this number for next quarter. Frankly speaking, this is the only thing that matters. There is discussions about how much CapEx is going to go up as well, but I think this is still the most important thing we need to focus on.
What's the contribution to Azure? Am I saying that right?
Azure?
From artificial intelligence.
Yeah, so what we have calculated now, remember for Microsoft's case, they do not publicly disclose the dollar number of Azure growth, the Azure sales, but they only give the growth rates. What we have done is some kind of backward calculations is in the last quarter, contribution from all AI was roughly around $1 billion, or which on an annualized basis is about $4 billion. So in terms of the contribution in percentage points, they grew 31% last quarter, and out of that, 7 percentage points of growth was because of AI. So that's another metric we're going to look for is what kind of contribution they get this time and what could we expect next time.
Today, the news is that Microsoft is reporting an outage of some Office and cloud services. That doesn't feel good into earnings, particularly after the CrowdStrike incident. Why is this stuff happening?
See, one of the things is to remember is this thing is so big right now, and these guys, you could say whether it's a software update or cyber attack. I'm not saying in this case it is a cyber attack, but there is so much pressure on a lot of these larger cloud vendors to make sure their services are up, and which should be, because these need to be up 99.99% of the time because so much depends on it. So there is always going to be scrutiny anytime there is any disruption in services. But I have a feeling that Microsoft will get a lot of questions on the call today about not just this outage, but what happened with CrowdStrike and how could Microsoft let something like that happen.
How much does Microsoft depend on other companies like NVIDIA, for instance?
Well, they do depend on it, because at the end of the day, if they are getting a lot of AI demand coming in, let's say from OpenAI, because OpenAI's backend is Microsoft Cloud Infrastructure Services. If they are not able to get GPUs from NVIDIA, they can't expand at that same rate at which the growth is coming. So there is a bottleneck over there when it comes to chip supply, when it comes to just the expansion of the data center architecture or the infrastructure. Those are very important things, and that could also be a concern for expansion of AI into next year.
Does at some point they say to themselves, hey, we don't want to be dependent on NVIDIA, let's do it ourselves? Or is that even a threat in other parts of the industry?
Well, most cloud companies are working on their own chips, their own design that works in their own data centers. But frankly speaking, at this point, NVIDIA is the person or the company that can give them those GPU chips that are needed to train some of these large language models. Down the road, yeah, anything can happen, but that's not, unlike just creating a new building, this is not that easy. It takes years to build up a capacity and even come up with anything close to what NVIDIA is doing.
We heard, CNBC reported that Delta's sort of looking at CrowdStrike for some compensation based on the outages and how much money they had to put out to manage their clients. Is Microsoft going to see the same thing from companies, or does Microsoft go to CrowdStrike? How does all that interaction work?
Yeah, this is where the lawyers are going to get really creative, because Microsoft has much deeper pockets than anybody else out there. And one of the things we think what's going to happen down the road, this is going to force companies to work with larger vendors because they have deeper pockets. When it comes to business interruption, large companies can go after the likes of, whether it's Microsoft or Amazon or Google, if they are buying more technology products from them. So we think there is going to be a movement, but I am dead sure we're going to see so many more claims coming in, not just on CrowdStrike, but Microsoft as well down the road. Now, what happens with that, that's, I'm sure, is going to be a lengthy battle.
If I use their Office applications and I want to protect myself, do I get less cloudy?
Yeah, not really. In fact, the more you are in public cloud, the safer it is, just because the dollar amount of money that's going to protect those services. You may be worse off if you just have, your own device without any extra protection on it, and don't have that level of third-party, firewalls protecting it.
All right, Anurag, we're really excited to see this play out over the next few hours and then into earnings. We're looking forward to your analysis on that as well. There's Anurag Rana, Bloomberg Senior Technology Analyst for Bloomberg Intelligence, joining us on Microsoft. That stock heading lower into the earnings report, where it's going to be about the Azure growth, makeup of AI, and then that CapEx and sort of how all three of them work together. Also, John Tucker, some breaking news here. Airbus coming out with its second quarter earnings, taking a look at adjusted EBIT, which is their metric for earnings, coming in at 814 million euros. So that definitely beat estimates. Revenue, though, maybe coming in an inch light, coming in at 16 billion euros overall. Taking a look at commercial airplanes, that wound up beating a bit. You also had defense and space segment coming in at over 2.5 billion euros. And helicopter revenue, I actually didn't know that, coming in stronger than estimated as well.
How much business are they, if they are, taking away from Boeing? Is one of the things I want to know.
Lots and lots and lots. But they're having their own ramp-up issues in terms of supply chain problems, and they said that their A220 ramp-up continues towards 14 a month rate but in 20 and 26. They also see adjusted full-year free cash flow coming in about 3.5 billion euros. That was a little lighter than estimates. Shameless plug, I have the CEO, Guillaume Faury, coming on at 3:10 on television. So definitely stay tuned for that interview.
Listen.
Yeah. We will work on that in the break.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Microsoft ahead of earnings, down 1.5%. Microsoft, meanwhile, says it is investigating outages of some Office applications and services. It says the issue is impacting multiple Microsoft 365 services and features. Again, we've got Microsoft down now by just about 1.5%. A U.S. appeals court has granted the airline industry's request to temporarily block new regulations from the Department of Transportation mandating upfront disclosure of certain fees, giving the carriers an early win in their litigation with the agency. JetBlue is going to be cutting $3 billion in capital spending through 2029. The stock is soaring on that word. Also plans other measures to boost pre-tax income by as much as $900 million. And with more on the story, here's Bloomberg's Kimberly Adams.
Charlie, it's part of a sweeping plan by the new chief executive to restructure operations and return the beleaguered carrier to profitability. The airline increased to 15 the number of cities where it's ending service and has cut more than 50 routes to trim unprofitable flying from its network. The moves are the latest to revive the carrier's fortunes in the face of persistently high costs and diminished growth prospects following the breakup of multiple partnerships. Charlie?
And that's Kimberly Adams reporting JetBlue shares, they are surging right now by 15.9%. Lots of earnings among those reports today. Procter & Gamble, it reported quarterly sales that missed analyst projections as the maker of Pampers diapers and Tide detergent slows its pace of price increases. Procter & Gamble shares, they're lower after earnings, down now by 6%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday. Happy eve of the Fed. I'm Alex Steele alongside John Tucker. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Let's get you up to date now with world and national news. And for that, we also go to John Tucker.
Just temporarily filling in for Michael Barr. Let's start off with the acting director of the Secret Service testifying on Capitol Hill. Right now, Ron Rose says there were multiple failures the day of the assassination attempt on former President Trump. Rowe, before the Senate Judiciary and Homeland Committees, says he traveled to the attack site in Butler, Pennsylvania, and says he can't defend why the roof was not better secured.
I went to the roof of the AGR building where the assailant fired shots, and I laid in a prone position to evaluate his line of sight. What I saw made me ashamed.
Rowe took over the job from the director, Kim Cheadle, who resigned. And former President Trump seemed to back away from his earlier commitment to debate Vice President Kamala Harris. In an interview with Fox News, he questioned the value of a meetup and said he probably will debate, but he can also make a case for not doing it. Let's get more from Bloomberg's Bill Ferries.
He certainly seems to be trying to keep his options open. He says, yes, I'll debate, but, I may not. The official line has been that the Republicans are waiting for the Democrats to officially make Kamala Harris their nominee. That should happen by, I think, August 7th is the date for that. But yeah, there's some hemming and hawing about whether it'll take place. Maybe there'll be adjustments to the date, the September 10th date. Trump has also said he'd like to see it hosted by a different network than ABC.
That's Bloomberg's Bill Ferries. And the clock ticking for presumptive Democratic presidential nominee Kamala Harris to pick a running mate with her party's convention just over 2 weeks away. North Carolina Governor Roy Cooper has taken his name out of consideration. And at the Paris Games, organizers postponing the men's triathlon to tomorrow, citing insufficient water quality levels in the Seine River. In the overall medal count, right now, the U.S. leads 20 medals. France has 16. China has 14. I don't know what the breakdown is between gold, silver.
Japan. Japan's winning all the gold.
No, China, you mean?
No, Japan.
Or is it Japan?
Mm-hmm, it's Japan.
Oh,
At least last time I checked, it was Japan and then China, and we have, I think, 3. But that could all change in just about 15 minutes' time when the women go for it in the team all-around final in gymnastics.
Oh, must watch. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker. And this is Bloomberg, Alex.
Okay, so now John Tucker was Michael Barr, but now he's Paul Sweeney. So one thing that I find quite interesting, we talk a lot about how Kamala Harris has raised so much money, and now you look at the different groups that are sort of coming together for her. Apparently white dudes, they raised $4 million for Kamala Harris. This is a new group, and it's hoping to continue its social media momentum. This is after her campaign raised, what, $200 million in the first week. And by white dudes, we're talking Jeff Bridges, Mark Ruffalo, J.B. Pritzker, Pete Buttigieg, and about 200,000 others.
And with Jeff Bridges as part of this, it's a play on his movie, The Big Lebowski, where
Yes.
he was the dude.
The dude.
And the quote, the dude abides.
Which I hear this is what? Is this your favorite movie?
It's up there. I mean, it's right up my alley. That's
Okay.
the kind of film that I like. It's just kind of wacky enough to be right at the top of my list.
I mean, I feel like there is a small world where
It's
you may
not
like
an
Deadpool.
X-Men
but,
type of movie.
But you may like Deadpool. There's a small window for that within The Big Lebowski, maybe. Anyway, but it's not just, white dudes for Kamala Harris. There was also a lot of momentum among the black community as well, so different racial groups coming in on that. There's also been a cry for white women to get out there in a very different way, saying they didn't come through in the right way in 2016. So interesting how that plays out.
It's going to be interesting to see just, to what extent does the fundraising translate into actual votes, especially in the swing states.
Oh, yeah. I mean, so far, that money is definitely coming in. That wraps it up for Bloomberg Intelligence with myself and John Tucker. Coming up, Balance of Power with Joe Matthew as we take a look.
I'm finished?
You're done. You can go. It's a miracle. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
And the ad wars begin. Welcome to the fastest show in politics as the Trump and Harris campaigns unleash new ads backed by millions of dollars, alongside a Veep stakes that remains a big focus for Democrats and a Veep choice that has some Republicans wondering. We're going to have a unique conversation about this race coming up with none other than Bill Kristol, the force behind the Weekly Standard, now at the Bulwark. He'll be with us in just a moment, as we'll also look through the race, I should say, through the eyes of Wall Street. Bloomberg Intelligence